Good evening to all my colleagues from Ujjivan and all the guests who have gathered here to be part of our story of building a mass market bank. I, Deepak Khetan, from the Strategy and Investor Relations team of the bank, am your host tonight. Today we have put together a strategy, we have put together a presentation on our strategy, on our outlook, how we are building the bank over the next 3 to 5 years. The presentation being displayed today has been uploaded on our website and exchanges, and a recording of this event will be put on the YouTube later this month. Apart from the presentation here, we have also put 2 Hello Ujjivan booths just outside this room, which we'll request all the guests here to visit and understand what we mean by digital inclusion, what we mean by increasing the digital penetration and serving the masses of this economy. Today, the agenda of today is, we'll start with an opening remark from our MD, Mr. Davis. He'll talk about the overall strategy of the bank and how the team Ujjivan has pulled together a remarkable turnaround over the last 18 months and the best ever year in the history of Ujjivan. After him, we'll have our CBO, Ms. Carol Furtado, who will talk about our liabilities, which makes the backbone of any bank. We'll also have Vibhas, our micro-lending head, who will talk about micro-lending business, which is an ever-exciting story, followed by Pradeep, who will talk about affordable housing and how that business is shaping around and how we are investing more and more into that business. We'll have Ashish talking about credit and collection, and he probably is the hero of how the entire turnaround happened and how the bad asset quality book turned around in the best in the industry today. We'll end the presentation, and before ending, we'll have Martin sir talking about the digital, the Hello Ujjivan story, and the entire technology that we are talking about, how we, on the platform that we are building this bank. And we'll have a way ahead presentation again by our CBO, Ms. Carol. I'll now call our MD and CEO, Mr. Davis. Before I call him, I'll introduce. He has been with Ujjivan since 2015. He's a career banker with a significant domestic and international experience. He has been the leader of the turnaround that we had at Ujjivan. He has been the leader of conversion from an MFI to SFB. Over to you, sir.
Good evening. I'd like to add my welcome to that of Deepak's and welcome you to this session, which today for 22-23, I would say, is the best SFB in India. I'm putting my, at the end of this presentation, I hope you will also agree with me that, that is where we are today. It has been a journey, a remarkable journey, especially in the last 18 months, post-COVID, when things turned around. And, one of the things that I would like to also emphasize is the fantastic team that we have at Ujjivan, which has made this turnaround possible. And any turnaround has to be a team effort. Success has to be a team effort. And I think that is what we have at Ujjivan. And that is why we were able to turn this around as fast and as remarkably as we are done. So please, have this session, listen very carefully. If you have questions, we'll discuss it at the end. So we'll start with, the numbers. I think all of you have seen the numbers. And, 1,100 crores is quite a number. Not more than, less than 200 companies in India make that type of a profit. It's very remarkable because the previous year we had a loss. And that, in what I tell people, is because of the COVID, because of an act of God. We couldn't do anything. In insurance, we say act of God. And that was what the COVID situation was. But the team got together, and in 6 quarters, we completely turned that around. And I thought we should wait until this final results were announced in May for this event, because this gives you 6 quarters to look back and then make your own conclusions as to what lays ahead. So Ujjivan did a remarkable 24,000 crores loan book, 20,000 crores in disbursements, and when I say best, I'm not talking about these numbers. You look at the ratios. They're at the bottom of the slide. A NIM of 9.5, a return on assets of 3.9%. How many banks or how many financial institutions can produce that? A return on equity of 31.4%. All fantastic numbers. And these are numbers that we are not going to be flash in the pan. They are numbers that we will be working with for the future. The book today is, we have also a fantastic deposit base. The deposit base has grown remarkably in the last year. And why we were able to grow that book very well is because of the strength of our NIM. With the NIM, we have a flexibility like nobody else has got. We can raise the interest rates when we need to get the deposits and play that market the right way. So that flexibility is with us. And I think that is something that everybody needs to understand. And we did that in August. We did that in August when we found that our growth was going well. We needed more retail deposits. So we moved ahead and put that in place. So all in all, there is a story which you will like to believe and which you will have to understand as we go forward. Then finally, of course, we mentioned on this slide the GNPA and NPA. True, we had difficulties. But when you have difficulties, the team has to come together to make that recovery. And that recovery during 22-23 has played a significant role in being able to take us where we are today. So all in all, from all aspects, Ujjivan today makes sure that we work on 360-degree basis. That means all aspects. If you look at any of our ratios, any of the regulatory ratios, we are among the best. You add it all up, it sums up to the best SFB. Now, these are slides which you may have seen earlier, but I will just quickly run through them. One of the things that goes well for us is a diversified pan-India presence. We are there today in 25 states. We have added Telangana in 22-23. We will be adding Andhra Pradesh in 23-24, and that will make it 26. We are continuing to grow. Brick and mortar is important. Our branch network will continue to grow. But at the same time, in relation to our cost structure, looking at the cost-income ratio and the other aspects, digital is also going to play a part in our growth. And we are building that digital base, and in the future you will see a contribution from digital going up. So all of those are things that you need to understand about the way in which we are growing our business. The physical presence is important. Trust is built on people seeing us, and digital is the way in which technology is going to be built going forward. And that will help us to reduce our costs. So today, we serve 77 plus lakh customers, and we have about 18,000 employees. That's quite a sizable organization. And today, as an industry, I just want to touch upon the industry because many people during COVID shunned the microfinance industry, saying this is something that is having troubles. Let me assure you, this is a very good business. It takes care of financial inclusion, which is the important subject for the government, for the Reserve Bank of India, and for the upliftment of the masses. What the small finance banks and MFIs have done is quite remarkable. There have been recent articles about that. If you have read them and seen how the country has changed because of microfinance. So as an industry, this has done extremely well. As small finance banks, let me tell you, in 1995, Reserve Bank of India gave many licenses. Half those banks have disappeared. In 2015, RBI gave 10 SFB licenses. All 10 SFBs are still here today after the worst crisis of COVID. So what does that tell you? This is an industry which knows what it's doing, which is capable of surviving the ups and downs, and is able to go forward. So I think that is something that all of you must understand, that this industry is here to stay. And Ujjivan is one of the best in that industry because we know the market and we know how it works. And we have been in that for now about 15 years. But our business is not only microbanking. We have also diversified into other areas. we have gone into housing. Now, last year, we regrouped. We went together and we decided to look at some of the things that we were doing, and we made housing an important part of our exercise. We rejuvenated the business and it has been relaunched. So like that, we will be looking at other parts of the business, and in another year or two, all our businesses will be moving like well-oiled machine. So that is our objective. We go back to the drawing board, we try to make it better, and then we push forward. So this year, you will be seeing housing, and my colleague Pradeep will tell you more about it, playing an important role in our growth. So that is where we are trying to balance the unsecured portfolio and the secured portfolio. Today, it's about roughly 70-30. We are trying to move towards a 60-40 model in a couple of years. And then the board will decide as to what to do next. So that is the general direction that we are growing. These numbers, they are fantastic numbers. The net interest income, for example, has seen a steady growth. The PAT has been growing steadily. You have been following us quarter on quarter, and I don't need to repeat that, so I think I'll just go forward to some of the other numbers. The most important part is the way in which our NPAs, played out during the last year. If you look at where we started at the beginning of the year, or in 21 during COVID, and where we have reached in March 23. I think that is a significant change, and that is something that tells you that our people were able to come together and work towards bringing down the NPA levels. So I think that is something that has helped us, and we will continue, because it is something that maybe the numbers will come down, but it is something that we will continue to look at and continue to focus on, because there is still some benefits and some things to come out of this NPA portfolio. The fantastic part of last year, everything, I would say, every part played its role last year. Everything fell into place. But, the growth in deposits, especially CASA, was something quite spectacular. I think even the Reserve Bank of India appreciated what we did, increasing the retail base so dramatically. And I think that is the way we will go forward. Our retail deposits are important to us, and that is going to be how Ujjivan goes forward. And the CD ratio also was very good. We ended the year with a good CD ratio. And I think, with the deposit-taking license, this is something that is going to help our business go forward. So again, some of the good things that, SFB license can do for us. The other aspects that I would like to, draw your attention to is our balance sheet has got a lot of strength in it. It's not just the CRAR, which is over 25%. It's also the high PCR, which is there. We have made sure that the coverage ratio is very good. And also, the NNPA is so low that, we are wondering what comes next. 0.04% is a fantastic number. So all in all, we are looking at good credit quality, and our MFI book today is in great shape. And also, I think you have seen the collection numbers. Fantastic. I think that is all I can say. In a few months, month after month, there's 100% collections. I think that is 18 months after COVID is over, and it's a sign that the economy is in good shape. It's a sign that we are doing what we are doing, and we are able to produce that results. The OPEX that we have is also under control. I remember, when I joined Ujjivan in this position, that was one of the first questions that we had about the OPEX. Today we are at a very comfortable level on OPEX, and I think we will continue to focus on that area. The liabilities and cost of funds is also under check. We have positioned ourselves for a turn in the interest rates, and I think we are well positioned for that. We'll see how it plays out in the second half of the year, whether the interest rates come down, but I think we are in a very good position on that front as well. I'd like to now just focus on a couple of areas for the current year. As I said, we are growing our asset book. with a mixed secured unsecured portfolio. We are trending towards 60-40 for the time being. I think we'll get there by 2026 or thereabouts. The digital channels, the alternate channels for delivering our products is something that we are also working on. We will ensure that the digital plays a significant role. And the most important part in controlling costs and everything is productivity. And that is something that we are very consciously looking at, and we are making sure that works well. The other aspects that I wanted to just touch upon is the reverse merger. I think some of you are interested to know where the reverse merger is. We presented the documents to the NCLT at the end of March, and the NCLT in Bangalore, both the companies, the holding company and the bank, are both registered in Bangalore. So the NCLT in Bangalore is reviewing our case, and we still hope that during the third quarter of this year, we'll have a final response from them, and we'll be able to take it forward. So that's where we stand on the reverse merger. And finally, I think the other thing that you may be curious to know is, or ask, is about succession. RBI has extended my term until 2025. That is something that was cleared a few months ago. The board of Ujjivan is looking ahead. We are looking for the successor, both internally and externally. And as soon as that is in place, the board will be approaching the Reserve Bank. So I think that is going to play out as we want. And here I would like to say that, if you look at all the small finance banks, most of the small finance banks still have the founders as the managing directors of their companies, except Ujjivan. The founder stepped down in 2019, and we have gone through the exercise of, post-founder, MD, how do we settle down? And that is a good experience we have today. So I think we are one step ahead of the others in terms of that aspect. So you don't have to worry anymore about succession. And, succession is something that will come in the normal course. And it has to. It has to. This is part of the growth of an organization. An organization's maturity shows that it comes through and has a proper succession plan. So Ujjivan has that succession plan, and rest assured that we will move in the right direction with the RBI and get that. And of course, as you all know, recently RBI withdrew their nominee, indicating confidence on the organization that we are moving in the right direction. So with that, I would like to now hand over the podium to my colleague, Carol Furtado. Carol is a banker with 27 years of professional experience. I don't think there's anybody today in the microfinance industry who knows more than Carol. She has been with Ujjivan since 2005 and is one of the 7 members that laid the foundation and built Ujjivan. Over the years, she has held various positions in the back end and front end at Ujjivan. She is known among us as a troubleshooter and has navigated Ujjivan through many crises. In fact, during the transition, she was the head of HR, and that was a very important role to make sure that every employee who was a microfinance employee at that time transitioned into a bank employee. And she did that very well. She currently handles all the businesses and marketing for Ujjivan. So I'll call upon Carol to come to the podium and take you forward on the liabilities.
Good evening, and thank you for your time with us. In the next 20 minutes, I will take you through our experiences in the last 18 months, how we built our CASA and increased our CASA percentages to greater than 113%. Deposits grew by 81%, give some color to it, and also talk about our way ahead for liabilities. To take a step back and enable a better understanding of our outstanding liability growth in the last 18 months, it is important to state that soon after COVID, our asset book, especially the microfinance portfolio, grew fast. And we had to immediately make plans to grow the liability book to support the asset growth. Our business model supports asset products that have a high interest rate, and that was the reason we could afford giving a higher interest rate for our deposit products. The bank has been able to rapidly expand its deposit franchise in terms of volume and value, both. This was possible because of the detailed ground level work we did during this period, brought in people with the right experience, revamped and customized our training programs, technology upgrades, focused approach for each customer segment, and categorized our branches based on primary and secondary data on location potential. Each branch executed their plans based on customer segments in their operating areas. Customer service has always been our strength and continues to be, making our customer base very stable. Our physical reach is well complemented by digital reach on our user-friendly internet and mobile banking platforms, business net banking services, phone banking services. The bank was early to anticipate the rate cycle and be ahead of the peers in terms of taking deposit rate hikes. We were able to leverage on the interest rates, which further aided our deposit momentum during FY23. However, we have kept the rate higher towards medium term, which would ensure quick benefit when the cycle starts to reverse. Also, despite the rate hikes, we were successful in keeping the cost of fund within control, only a 20 basis points rise over FY22 despite multiple repo hikes. All these measures helped us reach the 25,000 crore deposit base target with a 7.4 million customers. We have reached the base camp. Now we have to reach the top of Mount Everest. The focus is on the road ahead with newer avenues of growth and further enhancing our capabilities. We are continuously expanding the avenues of liability franchise and especially the deposit base. Some of the pointers of the focus ahead are here, which I will talk in detail in the next slides. The success we have seen with having focused programs for our senior citizens, high net worth individuals, and trusts, associations, societies, clubs is being taken forward as we build a base for a wider spectrum of the society, the aspiring middle class, mass market and regional languages, tech-savvy customers who prefer banking without visiting branches, young professionals, established investors, entrepreneurs, and MSME customers. We are expanding our products and services to make them more relevant to wider target customer base. Range of value-add products on current accounts and savings accounts, plus services like ASBA, DMAT, 3-in-1 account, tax solutions, etc. would be launched. Also, fee-based products like bank guarantee has been launched. CMS services are being upgraded. We have a multi-channel approach beyond brick and mortar branches. Our phone banking unit is a strong 150 plus bankers unit working at 2 locations in Bangalore and Pune, catering to customers across India. We offer more than 200 services on phone banking in 9 languages. These services are being expanded continually along with focus on increasing customer experience. We are launching video banking to give us customers branch-like services at the convenience of their doorstep, home or offices at their choice of time. These services will be offered 8 a.m. to 8 p.m., making it relevant for salaried base as well as students, entrepreneurs, and others. We are upgrading our tech platforms to offer even better and seamless solutions. CRM Next, Internet, mobile banking, business net banking services are all being upgraded and being made more user-friendly. We have always had and continue to have a customer-first approach. Customer service is our strength. This is being enhanced further through technology upgrades, leading to better turnaround time and efficiencies for the customer. Regular service audits are being conducted at branches to ensure adherence to processes and seamless customer experience. We are investing in our analytics capabilities in order to have targeted approach to cross-sell and upsell our expanding liability base. Around 2 lakh plus net customer addition every quarter is being onboarded, of which a good chunk is from retail branches. Advanced data modeling and lead generation will further increase efficiencies of our targeted campaigns. An important aspect of our strategy ahead is branding. So far, our investment in Ujjivan brand building has been minimum, which was largely due to several factors limiting our ability to invest heavily in marketing and branding. Today, the P&L can support such campaigns, which you shall see soon. This is how our customer base has been growing over the last few years, with FY23 picking up acceleration. As we have been saying, our goal is to go granular. These pies here talk about how contribution of individual depositors has grown over the years. Our endeavor is to push this further high with our new digital products. Our average ticket sizes in savings accounts has been growing, making it more and more remunerating for the bank. This also highlights the improving contribution from value-add SAR products. As I mentioned, we have a strong base amongst traditional customer segments like senior citizens, high net worth customers, women, task, etc. We have been launching targeted programs to acquire customers in each of these segments based on their needs and how we can deepen our relationship with the customers. For example, our high net worth campaign, Navratna, has seen good success and added to overall deposit momentum. Also, we have been working on non-resident customer base, which was negligible a few months back, but it is noteworthy to mention that today we have a stable base of around 450 crores in this segment. We have put together a strong team under task segment to address the needs of smaller and mid-sized task entities. Also, larger entities and government or quasi-government bodies are being served by a specialized team well supported by our local branches. As said earlier, to further enhance our customer base, we have been targeting tech-savvy millennials such as graduates, middle and high-income customers who prefer digital products. These customers generally are those who value convenience, have extensive digital footprints, do research-based decisioning, and chase higher returns. We will offer hassle-free, simplified solutions digitally. To fulfill the needs of our customers, we have built a network of multi-channels that provides trust of traditional bank and convenience of modern digital bank. Our wide physical network, spanning across 270 districts in 25 states and union territories, along with feet on street of more than 3,500 trained staff in the liability side, establishes trust among our ever-expanding customer base. Alternate channels like phone banking, video banking, internet banking, mobile banking, business net banking, state-of-the-art Hello Ujjivan, and several payment enablers like Ujjivan Pay, QR codes, point-of-sale machines, UPI, expand our reach beyond the boundaries set by traditional banking setup. These channels provide the right customer connect for servicing the demands of new age customers. Martin, our Chief Operating Officer, will talk in detail about phone, video banking, and other digital channels offered by us. In line with our expanding business needs, we have created a team of professionals who have built a stable and scalable liability book. To attract right mix of talent, we have tied up with reputed institutes and universities, plus we do employer branding to attract lateral hires. Teams are well staffed with backups for every critical role to maintain business continuity. The team sizes are evaluated and adjusted regularly basis business needs. Our compensation structure, both on the fixed and variable, are competitive and in line with industry to retain high-performing employees. The organization structure provides clarity in career growth and motivates our performing employees to deliver their 100%. Also, Ujjivan has a strong performance-based culture that acknowledges and rewards talent. Our campaigns and sales contests gives boost to the high-performance culture of the bank. We continue to invest heavily in learning and development programs which enable staff to develop and grow in the bank. For example, our flagship branch managers workshop has been a huge success in boosting the confidence and relationship management skills for our branch managers. On the digital side, we are launching a complete digital fixed deposit with full KYC shortly. It is a simple Aadhaar 6-step process with minimal documentation and full KYC. Our digital savings account product is also work in progress and will be launched soon. We are excited about the digital products. It will enable to expand our reach to customers beyond PIN codes being served by our brick and mortar branches. The product suite will also include digital current account, which is a requirement of the new generation. We will not be constrained by the reaches of our branches, but we will be able to see and service fixed deposits, savings, and current accounts across the country. Along with digital products, we are investing in technology to deliver improved customer experience and our own analytical capabilities. Also, we are getting into strategic tie-ups with fintech partners to acquire new capabilities. These investments will bear fruits in the coming years. I have mentioned earlier about investments in branding. Until March 22, we have been very passive in doing above-the-line brand campaigns. It is only in the last year that we did campaigns at national level, like Independence Day campaign, regional festival campaigns, and Republic Day campaigns. These campaigns have been a huge success and brought us nationwide recognition, driving business volumes. Our entry into Telangana brought in wide recognition. Our branch launches have generated a high level of awareness in the areas we work. There is definitely an increased awareness of our brand. During the year, we will further intensify our branding efforts with strong national level brand campaigns. Our goal is to build a base that grows faster than our asset book and at a cost that brings us competitive advantage. Our 4 focus areas are: 1. Have clear strategies for acquisition and deepening relationships with existing customers through a customer segmented approach. 2. Customer service is our key differentiator and will continue to do so. Our focus is on relationship building, enabling customers to avail our products seamlessly, enhancing customer loyalty. 3. Use multiple channels to acquire and service customers and not just rely on brick and mortar branches. And 4. Increased brand awareness. We strive to take our CD ratio to industry average of 80%, fully meet our asset book requirements through customer deposits. Retail deposits in CASA would be lion's share of this as we wish to grow, but grow with a stickiness and cost in mind. Our cost of funds has fallen over 5 years, except in FY23 when we saw multiple repo hikes. The cost of fund is a key focus area with the objective of converting the investments I discussed into lower cost trajectory. Over the medium term, with a focus on current accounts, savings accounts, and reducing our premium over larger peers, we will bring this down to levels that are on par with the mid-sized banks. With this, I end my presentation. I will now request Vibhas Chandra, Head of Microbanking, to take us through the microbanking journey and our way forward. A little bit about Vibhas. Vibhas has been with Ujjivan since 2008. He joined Ujjivan straight from B School, XIMB, and has held many positions across the country in Ujjivan. He has been instrumental in starting our operations in the East region and one of the earliest leaders of individual lending in Ujjivan. He currently handles the microbanking portfolio, the most successful business in Ujjivan. Over to you, Vibhas.
Thank you very much, ma'am, and welcome to all of you again. Uh, Microfinance is where Ujjivan started, and today we are one of the largest and most respected organizations across microfinance institutions. So far in Ujjivan, microfinance has been leading the asset growth for the company, and for future also we have strategies to make this business further grow. Not only with unsecured lending microfinance that we do, but also we have planned to do secured lending with our customer, as well as we are also building liabilities book with the same customer segment. At industry level also, industry has also evolved a lot in the last 50 years, and today it is so large that it has become so important for the economy, the nation's economy. You might have heard Honorable Prime Minister talking about the importance of microfinance in building nation's economy at grassroots level in his speech last month during Rozgar Mela. It is important, but at the same time, we have also heard multiple questions and queries coming in front of microfinance industry, especially around the risk that is there in the microfinance institutions, as the customer segment is very, very different. At the same time, loans are completely unsecured. But at the same time, we would like to discuss with some hard data whether this industry is really risky. In the second part, the other question that comes to the microfinance institutions is that whether this industry is saturating. Because after each crisis, you see the numbers, the way the industry goes down and up, generally people feel that the industry is going to saturate at some point of time. We don't believe so, and we have again hard data to show that what is the potential of this industry, how big this industry can become. In the last part, as we believe that this industry can become so large, we have also kept few slides on how Ujjivan has prepared itself in the last 5-6 years to win the next battle, the next growth in the microfinance sector. So, starting with my first part is, I will go a little in the history. The microfinance industry is not new in the country. It is over 5 decades old. It started in 1974 with the establishment of Seva Cooperative Bank. And for the first 30 years, it ran like a, more of a social organization, helping the bottom of the pyramid. It was only 2000 when RBI made some changes, including inclusion of microfinance loans into PSL, and the NBFC came into the picture and ruled between 2000 to 2010. And like any other less regulated industry, microfinance was also was not an exception. And with uncontrolled growth, the first crisis came in the form of Andhra crisis. At that point of time, the microfinance was largely south heavy, with the epicenter in Hyderabad, with all the giants operating out of Hyderabad. Though we were present in Bangalore, headquartered in Bangalore, and first operation we started in Karnataka, we realized that risk, and we were, we decided against going to Andhra Pradesh, and instead we expanded our operations in other part of the country, and that proved to be right. But at the same time, that gave industry to just go back to the drawing board and to understand that how microfinance can be delivered in a more transparent way to our customers. And as a result, the self-regulatory bodies like MFIN, Sadhan came into the picture. Also, RBI also understood that some regulation is required there, and some things happened there as well in the form of Maligram committee recommendation, and changes happened there as well. It took some time, about 4 to 5 years, to rebuild trust among the regulators, but the first success came in the form of Bandhan getting universal bank license in the year 2014. And in the subsequent years, 2015, 10 entities got SFB license. 8 out of them were SFBs, microfinance companies. That was a reassurance and a reconfirmation of the fact that how important microfinance companies are in order to run the agenda of financial inclusion in the country. But as the microfinance company, including Ujjivan, was trying to convert it into a bank, demonetization happened. We all know about it, and converting it to a bank, and at the same time also facing the impact of demonetization, it affected everybody. Microfinance more because our customers' economy is mostly cash. So we came over that, and after again, that in 2021, what happened is COVID, and that is something which was a big shocker, not only to the microfinance industry, but to the entire world. We at this point of time, we have the industry has left COVID behind, but the degree of recovery and degree of success of different organizations are not the same. At Ujjivan, with the experience that we have during the demonetization, we were able to have some creative strategy around it, and we were able to recover faster and grow business as well. At this point of time, we are well settled and growing at a good pace. If you look at the last slide only, you will feel like this industry is going through a lot of external shocks every now and then, and industry might not have been able to grow in the last 10 years. But if you look at the same 10 years frame, in the last 10 years, how the industry has grown at a CAGR of 30% year on year, which is unparalleled. At the same time, if you also look at the OSP of the industry, it has grown 20 times in the last 10 years, which is huge. We are serving close to 6.4 crores family at this point of time. And in future also, our assessment is that this industry will continue to grow at a rate of 18 to 20% CAGR. One more change that industry is witnessing in the last, say, 5 to 10 years is the composition of organizations who are running microfinance business. It started as an NGO, then NBFC took over, and today if you see, about close to 60% portfolio is being managed by banks. And if the same number you will see about 5 to 6 years back, it was very, very small, close to 10 to 14% only. That also shows that very tightly managed organizations in terms of regulations like banks, they are also able to run this business profitably, and also shows that this is something which is attracting not only NBFCs or other organizations, even banks are into the picture. Another very small data point, but very, very telling data, which as we get compared as the unsecured business, we have tried to compare microfinance industry with other popular unsecured products in the country, including personal loans, unsecured business loans, credit card, and consumer loans. And if you look at the portfolio quality of all these loans, microfinance is either at par with the other products or better than other products as far as portfolio quality is concerned. At the same time, if you look at the yield that you have or NIM that you have in microfinance business, it is far, far better than the many of the other unsecured products, and the credit cost is almost negligible. That makes it a win-win situation. Another data point I would like to highlight here is look at the number of accounts that we have in microfinance industry and compare it with the most popular product, unsecured product in the country. The number of accounts are much, much higher, and it is very dynamically growing year on year. If you are sitting on so many customers, it is a gold mine that you are sitting on, which can build your business further. So one thing was whether this industry is risky. We don't believe that this industry has the same risk when you are into a lending business, and something we want to build further in Ujjivan. At the same time, as far as potential is concerned and whether the market is saturating is the question. In that case, I would like to draw your attention towards the slide where we are talking about the income segments of the country, and these two pyramids are 10 years apart. In 10 years, this pyramid has changed its shape, and it is no more a pyramid, I would say. It is more like a diamond shape, where the customers are moving from the poor category to the next category. And the microfinance company largely target the bottom two segment of the country. And with the population of our country, which is close to 140 crores, the bottom two layer only consists of 91 crores, which is the potential for microfinance in the country. Today, the entire industry is serving close to 6.4 crores family, whereas the potential for direct microfinance in the country is close to 25 to 26 crores. There is a long way to go as far as acquiring customers and touching these lives are concerned. But at the same time, this story doesn't end here. If you look at the movement of customers from the poor segment to the aspirers, the number is huge, 728 million. But at the same time, this customer is not only looking for the typical group GLG model, Gramin model loans, but at the same time, they are looking for something else as they are aspiring for a little more. But I would say that this customer segment is very, very profitable in the next 4 or 5 years. So if you want to invest on that, but as an organization, you need to be nimble, agile, and true to the customer expectation. On the right, you see there are certain products which is demanded by this customer segment apart from the typical microfinance loans, as per our study with our customers. And today, as I speak, most of these products we are offering to our customer segment, all the 60 lakh customers that we have in the country. So yeah, how as we believe that this industry has moderate risk like any other lending business, at the same time there is a huge potential. We have to touch 91 crore live. Then how we have prepared ourselves in this journey? A little bit about our journey so far. We started in 2005 as an NBFC MFI offering GLG loan only, which was a typical Grameen model, but at the same time, that time also we are very, very different in our approach. We were the first urban focused microfinance company, and still we have a strong presence in urban and metro. At this point of time, we have close to 60 lakh customers in microfinance and close to over 70,000 crores of OSP as I speak. We have tried to compare Ujjivan performance with our peers as far as the microfinance industry is concerned. If you see our CAGR in the last 10 years, we have grown at a rate of 36%, which is little ahead the overall industry average of 32%. That has also resulted into Ujjivan increasing its market share, whether it is the entire microfinance industry is concerned or the SFBs are concerned. Among SFBs, we are at 26.7% share we hold as far as microfinance OSP is concerned. At the same time, as we are growing faster, we have been able to ensure that our portfolio quality is also better than the industry. If you compare Ujjivan portfolio performance with any section of the microfinance industry, whether it is NBFC MFI or SFBs or banks or overall industry as well, our portfolio performance is much, much better than the industry at this point of time. And there is some reason behind it. It is not like we have only have one or two strategies which has worked, but the learning that we have right from the Andhra crisis followed by the demonetization and then COVID has helped us recover faster. As far as our unique approach is concerned, we from day one, when we started Ujjivan operation in microfinance in 2005, we had an independent credit team, which is something which is rare in microfinance industry. You will not hardly find anywhere else. And a very strong team, not only in corporate office or regional office. We have independent credit team at branches also, who take care of underwriting part of microfinance loans, which makes us unique. At the same time, we at microbanking, we are using all kind of technology which can be used for microfinance customer sourcing, and our processes and our underwriting is completely 100% digital and paperless at this point of time. Also, we have adopted certain banking practices which is not rare in microfinance, like rule engine, risk-weighted pricing, early warning signal, etc., and many more, which is normally not present in microfinance business, and which is helping us maintain our portfolio quality. One more important point is that you might have heard that with recent RBI policy changes around microfinance, now microfinance companies are supposed to get the complete family income details, and based on that underwrite loans for microfinance. We are doing it since inception from 2005, and we have data around each customer and their family member since 2005, and that not only helps us having better collection with our customer, but at the same time think about the customer family member income data you have, and you're trying to cross sell something to the family member. That is a strong overall data bank that we have at a bank for microfinance customers, on which we are building. One important learning that we have during the demonetization, that whenever any crisis comes, you are in two minds, you're in dilemma, whether to build your business further, because a lot of repeat loan customers are eligible and you want to give them loan, but at the same time you also have to ensure collection. And the bandwidth of your field staff, the feet on the street, is something which is limited. And during demonetization, we realized that though it is not a practice in microfinance, but at the same time there is a need to build collection team in microfinance as well. And during demonetization, we built collection team, and that helped us recover much faster during demo. As COVID came, we realized that we have to ramp up this team, and we were able to ramp up this team during the COVID, and that is one of the important reasons why you are seeing our portfolio quality much better than the industry. This collection team is a little different, because if you are dealing with such a sensitive customer segment, it is very important that your collection team is also aligned with the customer segment you are dealing with. And we have built this team keeping in mind that our customer segment is a little different from the other customer segment. Most of our supervisors in this team are from the microfinance team only, who have worked in microfinance, dealt with this customer segment for a long period of time. The independent collection team not only gives confidence that that our collections remain on the track, but also makes us future crisis ready if it happens. Yes, so one thing that we have been able to work on in the last 5 years is the product suite that we offer to our customers. In the slide where we were showing pyramid, you might have seen that there are a lot of customers who are moving upward in the income cycle and their aspirations are changing. We realized this long back in 2009 when customers after taking 2 or 3 cycles of group loan, they want something bigger, something better as a product. And we launched individual lending program long back in 2009. Today it is a very successful product within microbanking, microfinance in Ujjivan, also a role model for the industry. Currently about 18 to 20% of portfolio of microbanking in Ujjivan is contributed by individual lending program, and it is growing much faster than the microbanking average growth in Ujjivan. But we also realized in the last 5 years that we have been giving them IL loan for a long period of time, and we have a lot of data around customer, because generally if the group loan is something which is given one loan to a family because the kind of underwriting we do. But at the same time, as customers are aspiring, they are going up the ladder in income cycle, the typical loans which is given to the women is something which is we have left behind. We are also lending to men, and as you also include men in your product basket, your potential suddenly becomes 1.5 times, 2 times, because you are also talking to the men in the family. We realize that their loans, their requirements are very different. In last 5 years, we have been able to build multiple products, not only GL and IL, but also semi-secured, secured products like livestock, like gold loan. We have just launched last year. Two-wheeler loan is something which we are working with our customer for a long period of time. MLAP is something which we already have in our product basket. Secured agriculture loan, which is very popular among the maturing agriculture customer in the rural locations. These are some of the products today we are offering to our customers. It is no more group loan, which is largely offered by microfinance company at this point of time. We have multiple set of products basket that we are offering to our customers and fully prepared to serve aspirer category of customers as well. At the same time, we have not stopped there with asset product only, because as we started microfinance in Ujjivan, we always had a mission to provide full range of financial services to our customers. But we were not able to be, as an NBFC, you cannot provide all kind of products. But as we became bank, we saw this opportunity to also offer deposit product to our customers, though generally largely it is a product which is not sold to this customer the way it should sold to be. But at the same time, we realize that this customer is not only credit worthy, but also deposit worthy. And we tailored our product, made it in small ticket sizes and offer to our customers. And today, from the same customer segment, the 60 lakh customer that we have, and the same staff who are actually working for the asset product in microfinance, we have been able to build 2100 crore plus deposit book also from the same customer. This is something which is phenomenal, because your CASA ratio in microbanking is close to 55%. We will see this business further growing as we move ahead, as we have a bigger plan for building deposit business also from the same customer segment and the same staff who are working in microbanking. Why our customers are also interested in our deposit product, though they have access to all kind of banks, all kind of services which is nearby to their residences, is the last column where we are talking about a different alternate channel that we have built. First of all, the branches. If you go to our branches, the kind of treatment and kind of infra we have set up in the branches, that makes our customers, especially microbanking customers, feel home when they are going to our branches to do transactions. This is something which is not done with this customer segment in the past. Second, we meet all these 60 lakh customers every month through our field staff, and when our staffs are meeting this customer, it is almost like bringing the entire bank to their doorstep, because they can do all kind of transactions with our field staff with a handheld device. Third, the kind of channels, we also believe that there are other transactions mediums also which is required by this customer to access their saving account, and we have built all these channels. The virtual relationship management sounds like a phone banking team, but it is not exactly a phone banking team. We have built this team with the field staffs who have worked in the field for a long period of time, and now they sit in regional office and call and talk to the same customer. As they understand customer better, the discussions and the transactions is easier to manage. Second, we have built Hello Ujjivan. We will be talking a lot about this when Martin will come and present about it. But at the same time, this is a unique channel that we have developed for our customer. This also sounds like another mobile application in the market, but at the same time, if you consider microfinance customer segment and the kind of education and financial literacy and digital literacy they have, this is a very, very important application that we have launched for the customer. Our customers are such who can speak a certain language but can't read. That is the reality of our customer segment, and that is why this application is something we can talk to the customer and do your transaction. And we are not only building this application for deposit transactions, but entire cycle of assets slowly are building on this. But the basic three phases of a loan product, which is onboarding and then servicing, and after that repeat loan or the cross sell, we are building all these processes in this mobile application so that microfinance can be delivered in a very simple and different way to our customer segment, especially when digital literacy is something which is now becoming common among our customer segment as well. As far as transaction points are concerned, we want our customers to give a transaction point within 500 meters of their residences, and that is why we are building Money Mitra, and also which is our own corporate BC, where customer can just step in and do all kind of transaction without even going to a bank branch. At the same time, we have also tied up with Airtel Payment Bank, Pay Nearby, and Spice Money, so that they get a transaction point very near to their residences. All these initiatives have given confidence to our customer that this is a bank where they can do transactions swiftly and they can move their money from the informal and risky avenues to our bank. And that's how we have built this deposit book, and we are also gearing up for building this book further in the time to come. This I was talking about, that we have an independent credit team and independent collection team, which is very, very unique and rare in the microfinance industry in the country. So far, our growth engine, as far as growth engines are concerned, in the last 15 years, our growth engine have been traditional group loan product, and to a great extent, our individual lending program was also contributing to our growth, as it is 18% today, which was also a unique product which was offered to microfinance customers in the last 10 years. Third growth engine obviously was our branches that we have spread all across the country, and we have been acquiring customers from there. All these three will continue to be a growth engine for us, and we will be building on this business. If you see our last year number, we have been able to acquire close to 10 lakh new customer acquisition. 40% of that were new to credit. So we are seeing that still in the same branch, we are able to get not only new customer, but also new to credit customer. And we are also seeing second and third generation of customers asking for the basic group loan from us. But at the same time, we also strongly believe that if you have 60 lakh customers and a lot of data around these customers, and if you have all the products set up, which is logical extension of group loan and individual loan for your customer, cross-sell is a huge opportunity at Ujjivan, with all kind of product that we have, including IL, AMLAP, Kisan Credit Card, Gold Loan, Two-Wheeler Loan, etc. We will be working a lot on these cross-sell products with our customer segment in coming time. The third is something which is changing, especially in the urban and metro environment that we are witnessing. And as we are strongly present in metro and urban, we are also seeing a demand of customers to have digital lending with the data that they have, the better data that they have around it. And we are working on this with our partners, and we will be offering digital lending products and transaction-based product to our customer, so that we are not only able to retain our customers who are growing up the ladder and having better data, but at the same time, we will also be able to acquire customers from other peers where the product requirement is little better than what they are being offered at others. The one more important initiative that we have is we have also launched our QR code. Sounds like a product which is available widely everywhere. If you go to any shop, you'll find 2-3 QR code, but at the same time, you just move to tier 3, tier 4, tier 5 towns, and you'll find it rare. The digital literacy has reached to these locations also, but at the same time, still the QR code is in demand, but the demand has not been met. We have been distributing QR code to our customer for the last 2 years, and have distributed so far 3.5 lakh QR code to our customers and their family members. And we have realized that our top cities where the performance of QR code is much better is tier 6 towns where we are present. And that gives us confidence that we can actually sell a lot of QR code in the tier 5, tier 6 towns of the city, towns and also rural location of the country. One important thing here is that you just give a QR code to a microfinance customer and allow them to use it, and you will find their saving account about 10 to 12 times higher than the market normal microfinance customer. This is what we have witnessed with our 3.5 lakh customers so far. If they have business, if they don't have business, you just link their UPI with your saving account, and their balance will be 6 to 7 times higher than the normal microfinance customer. And that's how we have been able to, one of the important reason why we have been able to build deposit franchise with our customer segment. We want to build on this, and traditionally microfinance is delivered in a way that you start your relationship with your customer with the asset product, group loan. And that is what we also want to change a little bit, and we want to start a relationship with our customer, not only with asset but also with liabilities. We are giving this QR code to our customers and asking them to transact, and based on transaction, a lot of things can be done. The first benefit is that you get a lot of saving account deposit from these customers who are using it. But at the same time, the most important thing is that you get a lot of transaction data from these customers, which can be used to underwrite your customer better and give out right products. We will be building on this our Ujjivan Pay QR code a lot in the coming 3 to 5 years time period. All these activities that we are doing at this point of time is not only helping us, in providing right kind of product and services to our customer, but also helping improve our staff productivity. If you today see the kind of activities we have done around channels, close to 25% microfinance customers are paying us digitally. That unlocks 25% of your time of your field staff, which goes into center-wise or doorstep by collection. This is something we have been able to do, and we want to further build on that. If you see average time that a microfinance feet on the street spends on collection is close to 60% of their time. We want to unlock that time for our field staff so that they can spend this time in building other products which we are selling to our customer. So sell all other products that I am talking about, whether it is deposit or other product that we are selling to customer, we are not utilizing another staff. The same staff will be able to sell other products to customer, as we are unlocking a lot of time by building alternate channels. So what I would like to tell here is that so far we have been leader in this industry, both in terms of market size, respect, as well as being a thought leader and coming up with various ideas and initiatives. But at the same time, we want to continue with this. In the coming 4 to 5 years, we have a huge plan and a kind of investment we have done, and kind of the way we have worked tirelessly in the for technology development for this customer segment. But at the same time, if you see how industry is moving vis-a-vis how customers has moved, there is one set of organizations who are working very hard in the last 15 years and have very good understanding of their customer segment on one side. And now in the last 4 or 5 years, there is another set of peers who have come in who have very good understanding of technology, and they can deliver product to the customer much faster if they have data. But they don't have the understanding of the customer segment, which is very unique, because they don't have document to prove their income. We at Ujjivan have worked on technology. We find somewhere here where we have a very good understanding of our customer segment with the last 16 years experience. At the same time, we have worked tirelessly in the last 10 years to build product processes, policies to ensure that we are ahead of the curve. All this gives us confidence that we will continue to be a leader in the microfinance space and slowly inch towards becoming a mass market bank in true sense. Thank you very much. So this was about microfinance, where we want 4 to 5 years to become much bigger and better as far as customer product delivery is concerned. But now I would like to invite Pradeep B to discuss about our plans on affordable housing and AMLAP. Pradeep is with us for last 17 years, old hand in Ujjivan, and has been instrumental in establishing microfinance business in Ujjivan in early days. Also, he was instrumental in launching our IL program in the southern part of the country. He has been with the affordable housing team since inception, and today we have about over 3,000 crores of OSP in affordable housing, and we are already a huge plan going ahead to grow this segment of business. Over to you, Pradeep.
Thank you to each one of you for joining us this evening. I'll start from where Vibhas concluded. Graduating, aspiring middle class and fulfilling their financial needs is what we do in my business vertical. Two such products are affordable housing loan and micro lab. I'll first talk about affordable housing loan as it's already a large chunk of our business. Then I'll quickly touch upon our business in focus micro lab. This slide tells the potential we have in India for mortgage and housing business. Historically, potential for housing business is very high in a developing economy like India. The graph clearly mentions about it. About 12 years back, it was just 4.5 lakh crore, and when we ended financial year 22, it is almost 25 lakh crore booked in housing loan alone in India. Mortgage to GDP ratio is quite low, it is just about 10%. However, there are significant activities being observed to push on the sector. One of the very important initiative was Housing for All initiative from Central Government of India. If you see Western countries, this ratio is already crossed 50%, UK having 65% plus and US having 50%. For that matter, even China is at 18%. So we are still at 10%. This is including top metros and tier 1 cities in India. If you see only tier 2, tier 3 markets, there are a long way to go. So this clearly tells huge business potential we have in this country. Banks are dominating. Still, you could see housing finance companies could able to maintain their share in the range of 30%. The affordable housing segment is growing really fast. I think this has boosted the mortgage sector in India. This is quite evident with the growth of affordable housing sector, which grew at 32% CAGR against the industry average of 12%. Out of overall housing book, 60% share is coming from affordable sector alone. Again, this makes more sense that why affordable has lot of opportunity here. We at Ujjivan, since beginning, since birth of Ujjivan, we are well connected with the LIG, that is low income group and middle income group. So it's quite obvious and natural that we are interested in this part. We are focusing on rupees 5 lakh to 20 lakh rupees ticket size, where our push will be in coming years as well. Today, Ujjivan is one of the meaningful player in affordable industry. We are one of the fastest to reach rupees 3,000 crore book, which we achieved last financial year. We have been able to increase our monthly disbursement to about 140 crore, which was about just about 60 crore 18 months ago. Today we have all the products in our basket which requires to cater the demand in this segment. We grew at 42% CAGR, which is much higher than most of our competition in this industry as well as in industry percentage. Ujjivan Housing has well presence. We have significant presence in the west and south market. Over last few quarters, we also increased our share in north and east. Today, if you see, we have spread across 22 states by having, roughly around 140 clusters. I think if you compare with any housing finance companies who are actually active in this segment, we have well spread all across India. I think this has, many benefits. Few of them are like, it reduces concentration risk on any particular state, and it helps you scale up quickly, based on the market dynamics whenever you want. As Itira sir was mentioning, pandemic was a stress test for us. I think it helped us to emerge very stronger. In all the business, we took a stock, till financial year 2021. Like microfinance has about 15 years experience by then, housing has experience about 4 to 5 years. What we are doing, what's our strength and weakness, what needs to be done. I think when we have done a study or when we look back, it was clearly came out that the business, what we have in Ujjivan, the housing business is not viable enough. We are not getting decent returns on the investment what we do. Hence, we have decided to come up with new strategy for coming years. We have done multiple analysis within the organization. We have traveled across the regions to meet our leaders and brainstormed our feet on street to understand market nuances. We have done multiple discussions with our strategy committee of board. Very importantly, we have done detailed competition study. I think there should not be any shy on learning something from good experience. There are quite a few organizations who are doing really good in this sector. With all this, we could able to understand that Ujjivan housing is concentrated only on few states, and that too the larger business is coming from tier 1 and metro cities. High business portion was coming from only purchase cases, that is largely to builder segment. Of course, when you fund to builder segment, the LTV is very high, which is again risky, and it's very price conscious market, and you have to lend at very low rate. So we have decided to do a strategic change from there onwards. We have implemented quite a few changes. I think few of them already completely executed, few are under development now. So that is really bearing fruits now for us. I will touch upon few of the strategic changes whatever we have done. So I have few slides in a later stage which explains in detail about this. So I will skip those lines here. One important change, the first important change what we did is, and as I was mentioned, major portion of our business was coming from western market, that is Maharashtra and Gujarat. We had high concentration in apartment funding with high LTV and low interest rate, which is again not that great. What we have decided, since Ujjivan has well presence in tier 2-3 market, if you see today, Ujjivan has more branches in smaller market than metros in tier 1. So we just decided to capitalize on that. We started our business, we expanded that. There are a lot of benefits you have when you focus on tier 2-3 market. Basically, here you will find, customer will have land or site. They would have bought it from their inheritance way. So it is only the construction or improvement loan they look for. In the construction and improvement loan, obviously the LTV is very low. The own contribution from customer is very, very high, and it's largely self-occupied properties where the emotion with the property is very high, so there is very low chance of default. And today, though competition is increasing, till now I think we have quite a few chances to spread in tier 2-3 market. Hence, the chance of balance transfer is very less. So with all this, we have completely changed our shift. It doesn't mean that we have stopped our business from tier 1 and metro market. We grow at around 20% range in bigger cities, and we grow 40 to 50% speed in smaller cities. The second important change what we have done is that earlier our business was largely focused on volume. That's how the purchase business was coming up. With the penetration into smaller cities, the other products also gained its momentum, like it may be composite loan, home improvement, construction loan. So usually it gives slightly higher yield. The third change what we did is we changed our rate of interest matrix. Earlier whatever we had, it is basically was decided based on the customer income alone. So today we decide rate of interest to any customer based on customer income, profile of the customer, their bureau score, as well as the property type, what kind of property is mortgaging to us. The fourth important change, I think this is something very special for us. We had single collateral policy at pan-India level. Being India is kind of set up so many countries. You have many states which has its own set of laws. Every 200 to 300 kilometers you can see the legal aspects is getting changed. It was quite difficult to or beat on street to understand what kind of properties we can accommodate, what we cannot. So with the help of our internal legal team, we met quite a few legal vendors across the regions and locations. We have customized a state level collateral policy where our relationship officers in the field are very clear what kind of properties they can accommodate. If yes, what are the mitigates, what documents required, and what rate we can offer to them. Product changes also been done. It was kind of very standard. Again, it is very much customized today based on city, based on location requirement we customize. Like in some locations you need market value funding which is not required in few states. We have implemented that. Some states, some location ask for a seller BT, we introduced it. So few changes we have done, which is helping us to cater into more customer segment. Our process was largely manual. We started digitizing that. In earlier session, Itira sir as well as Vibhas mentioned about how Ujjivan is actually focusing on digital aspect. So similarly, we are following in housing as well. Another important, I think seventh important point, what we did is on collections. Till pandemic, we had one collection team to look after both secured and unsecured business. And being micro banking was too big, they could not able to actually spare time on secured part. And for secured, obviously, it requires special talent or a special skill set to manage this customer. So we brought in a new collection team exclusively for secured business. So today, along with collection, we also have a separate legal team who is managing all litigations. With the stable and robust collection team, we could able to bring down our PAR NPA drastically over last 18 months time. Moving on, I will talk about sourcing channel in coming slide. I have a separate slide on that. I will touch upon on later. Credit underwriting, since we were managing only informal and semi-formal customer, it was very similar. Now we have started catering to more segments, so hence we have decided to change as per the customer segment based on the income segment. Our engagement with customer was more of transactional. It was just one time touch. You disburse the loan, then do recovery. That's it. We have completely changed that. So today we are actually getting into very deeper relationship with them. It is not only we sell housing loan to them. We understand what is their family requirement, whether there is a requirement of any liability product, it may be CASA, FD, RD, or insurance, or any asset product to their family member. So it helps to deepen relationship with customer. The stickiness of customer will increase. I think being in a bank, this advantage we have when we compare to other housing finance companies. People, again, one of the important aspects. Our CBO had mentioned it earlier, how we are taking care of our employees. So this is very important in this competition era, and we are largely focusing to retain our talent by giving different set of trainings and keeping them motivated with the different rewards and recognition program on time to time basis. Our distribution model was earlier what we had is a branch based. It was quite difficult to manage to scale. We had a relationship officer sitting in branch. Credit used to manage 3-4 branches. We had legal and technical placed at regional office. So there are a lot of to and fro mails used to happen to decide on any single case. So we thought we need a model to help to ease this out, and by then the idea of hub model has come. So we had set up a retail centers to process exclusive loans, exclusive housing loans in a few locations. Again, I have a separate slide on that. I'll touch upon about that in detail. The customer segment, we were largely focused into informal and semi-formal, and today we also accommodate few customers from formal segment. When you have a relationship with the connector and DSA, it is quite important that you have well spread sourcing. So hence we started accommodating. So on the other side, there is a requirement of focusing on the micro segment, which is again one of the segment where we have high focus. So we launched a specific product to this segment called Micro Lab, which actually piloted in 2 states already, and it is completely ready now to scale up. Over last several years, we have been able to figure out our sweet spot to have our presence in the affordable housing sector. It's a combination of ticket size, income, and customer segment. When we started our business, we started from bottom left, that is by serving to informal segment, and over a period of time, we moved upward, and we could able to figure out what is the sweet spot for us, and we today have a ticket size of 10 to 12 lakh rupees, which is a mix of semi-formal and informal, with the income range of 30 to 60,000. In a simple word, aspiring middle class. This talks about products and segmentation. I think we have been able to diversify our customer segment in our book. The large share which is coming as of now is from bank credit salary, which is about 45%. Then the small businesses has the second highest share with 37, followed by cash salary. On the product side, we have about 70% business coming from home loans and 30% from non-home loans. In home loans again, purchase has higher share, which is actually kind of reducing now since our focus been increased to smaller markets. With the more penetration in smaller cities, we expect our construction loan and home improvement will grow and have major share in next 3 years. This slide clearly talks about and it explains very well how our distribution channel, our sourcing channel. As I was mentioned earlier, we are following more of traditional method. Largely our business coming from self-sourcing or through connector channel. I think this is not something very reliable. With the competition is increasing, you may not expect such kind of loans or share coming from your connector, though you give whatever kind of payout. I mean, it's again very competitive. You start with higher payout, tomorrow someone else will actually copy that and they will start. So being a bank, we have huge opportunity to increase alternate channel. What it means, we have well spread branches across the regions, across the states. We have high number of team members who are sitting in branch banking and micro banking. We wanted to increase our branch referral program. We have just started this program in South about 4 months back, and for our surprise, it was increased to 18% of our overall business of South from branch banking referral alone. So this clearly tells that there is a potential and you can actually grow that channel. The second one, we have ensured excellent customer service till now, so that is helping us to to get customer referral. We are actually coming up with good programs to increase that. The other two is that we have started investing on the digital marketing. We also would like to have some strategic alliances by onboarding some fintechs basically who can actually source for us. And another important thing is that we have a phone banking team. We are spending time and investing to do data mining and get leads from phone banking as well. So net to net, over next 3 years, we look forward at least 25% business coming from alternate channel. We have large credit team, as mentioned earlier in micro banking. Similar set we have today. When you cater into informal cash salary self-occupied segment, it is very much required that you should have credit at ground level. So we have placed credit officers across the places wherever we have sales officers. We do multiple checks on customer. There are usually 3-layer check, what we call. First one will be done by the business team, followed by credit, then from third party based on the customer profile. Not necessarily every customer profile needs that kind of check, but wherever it's required, we do that. Property is one of the important aspects, so we must ensure that we accommodate only good properties where we can ensure surface or other aspects in the future in case something goes wrong. We have internal legal team who actually vets the report whatever had given from the external advocates. Recently, after COVID especially, we had set up centralized credit processing unit for bank credit salaried. Earlier the similar programs we had for even bank credit salaried, where we were actually taking at least 5 days to decide whether we can give loan or not. Today with the CCP unit, we could able to decide within 48 hours. It's very quick. And it is actually helping us to have very low end-to-end TAT. We have strong credit and collection, which I already mentioned. The important aspect you should see here is that in the post-pandemic, we do regular monitoring on the portfolio. There are fortnightly and monthly review happens. We have a separate team who actually does this. It gives us very much clarity. You can call it as early warning signal. Is there any stress in any specific geography or any of the income segment? Competition is everywhere today. I think especially, again with the pandemic, many had decided to move on and come to the space of mortgages. I could see with my own personal experience, there are a lot of small microfinance institutions and even NBFCs that started, mortgage loans. Hence, it is important to, take care of your people, take care of your customer, right? And your channel partners as well. So we have kept ourselves ready to face that in coming days. People, we invest a lot, and we actually have very customized training programs to them. When they start their journey, we give very detailed basic level training. Then after completion of 6 months, we do a refresher training to them. That is followed by a sales skill training. We have come up with one very specialized training which we call as Raise and Shine. And usually when a P-Town Street joins or a relationship officer joins, in the 6 to 8 month time, he actually find it very difficult to get adjusted to the product and the environment. Some would have come from prime segment who managed only that segment earlier. So affordable something might be new to them. Though we hire right talent, it is quite obvious that we get different kind of skill set people. So usually if they don't perform, the organization will get into performance improvement plan. But we have decided let's invest through training. So we come up with this Rise and Shine. We call them to regional office. We give them refresher training for 2 days. Then our regional head, he will do a counseling session with him and understand what is that because of what he is not able to perform. After that, we put about 90 days hand-holding by monitoring them every week. There is a call also happens with the regional manager. So we help them to come up the curve so that they can be here and they can perform better. So this helped us to actually retain about 62% of such non-performers. They actually could able to increase their productivity benchmark whatever we had set. Process, of course, you have to be very strong enough in that. We are investing on the digital, so we wanted to have very quick TAT, which in some of the segment we already done. And the channel diversification, I already mentioned it. We wanted to have reliable and sustainable. Hence, we would like to have alternate channel business coming in. And customer, it is quite easy to anyone today to do balance transfer by offering very good rate. We are getting into relationship model with the higher stickiness. It is very less chance that customer will move on to any other organization. When we decided to scale, our growth is something not enough to ensure the secured percentage of the bank. So the management was very keen to invest in affordable housing. So when we thought of scaling this to a very higher scale, we thought the present model, whatever we are having, it will not sustainable. It may not actually give you that speed. Hence, we have come up with retail asset center plan, which will give you, quick access because we place every stakeholder in that place. It will help you to monitor your portfolio. It will give you early warning signals if there is anything going wrong. So with the retail asset center, in the pilot, whatever we have done, we could able to bring down our turnaround time drastically. Our forum flow earlier was highly skewed. We had a complaint from operations every month that you give file very late in the last week. So that we could able to actually address this hub model, and our average productivity is increased by 25% in these hubs. Customer service index is also could able to say high because you have better service by giving TAT or any query resolution. Everything happens from the asset center itself. So we could able to increase the service index. Portfolio hygiene is very important. We have collection team sitting along with the sales. So obviously this set will give us required boost in coming days. We have categorized into 3 categories just to have a clarity. In the locations wherever we get at least 5 crore business in a month, we call them as a platinum location. In these platinum locations, we have business, credit, collection, legal, technical, and a retention manager sits. Along with that, we will also have operation officer sitting, and the booking of the loan as well will happen from this center. It's an end-to-end processing center, not necessarily any connect with the regional office required to disburse a loan of 10-15 lakhs. We have actually empowered our credit team in these locations based on their experience to take some calls for certain loan amount. The other center is called as gold. Other than operations, we have every one LC sitting in this center. The third category is called silver. It is not that we are vacating some of the cities by opening these centers. So wherever we don't have asset center, we operate and we do our business through our branch network. Digital is very important focus in our agenda actually, and that is end to end, starting from onboarding. Today we have actually gone a long way. Our mobility is under testing today. We are all set to do go live at pan-India level. So this is kind of paperless onboarding of customers in the beginning. It has a lot of UPI integration. So many works will be bandwidth of credit will actually go up with this. And The digital processing, again, loan origination system, we have one today. We wanted to upgrade that. Again, that is underway. In next 3 months, we will have new loan origination system end to end, which will bring down our TAC. Post disbursement today, customer has to come either to branch or they reach out to phone banking or our call center, which we wanted to help them out by coming up with some app where they can actually do all post disbursement activities, including taking statement or interest certificate, etc. The last important is that we have a huge customer base. We would like to do data mining and analytics so that we can increase our share of customer coming from this channel, as well as to have monitoring of the customer. We have been able to bring down our NPA and PAR drastically. If you see, it had gone to a level of 16% at one moment, which had come down to 5.7% by end of March, and NPA had gone up to the percentage of 5.8, and we have half cleared it already, and it is just half done now. We are still on this with the help of strong collection team and dedicated legal team to do recovery of NPA, regular monitoring of our portfolio, and having better customer connect is helping us to reduce our NPA and PAR month on month. We also launched another product called Micro Lab. Now, why Micro Lab? While Vibhas was explaining, he actually shown it very clearly, that diamond structure, how the income level is going up. In my own experience, when we started microfinance, the ticket size what we were offering is 4,000 to 6,000. I think that was the highest ticket size offered by any organizations by then. And if you today if you offer the same, no one will be interested in that. The microfinance average loan itself actually came close to 1 lakh rupees. And individual lending, which used to be around 50,000 average loan, is reached 1.5 to 2 lakh rupees. With the aspirers increasing, I think that's one of the good share in Indian economy. So they are looking for slightly higher loan. We started with that, but with the learning of this segment, our average ticket size actually increased to 10-12 lakhs. So there is a missing middle in between 2 lakhs to 10 lakh. So we have good customer base from our existing customer. We have over 6 million customers in microfinance with whom we can actually increase this base, and we learned how to do secured business, mortgage business. With that experience, we can actually start onboarding them with the small ticket size lab. We have exclusive collection team. So all this giving us really good proposition that we could start this product. We have launched it and this is performing really good for us today. This is a high yield product. This will help us to increase our secured book in the bank. Some of the key drivers are you should have very quick turnaround time, and you should have very flawless graduation mechanism from microfinance to this micro mortgages. It is a collection led business. You must ensure that there is a focus investment on the collection team from the day one, and it's manpower intensive. So wherever there is opportunity, we should start by putting more and more manpower. We having only lab product, and there is a more demand. We have to customize the requirement based on the purpose. We'll come up with more products under this digital journey. Of course, if at all we are onboarding existing customer, you have their data already, and they are with us for 2, 3, 4, 5, 6 years. So not necessarily you have to go through the entire section of verification again. You can onboard quickly straight through process. Scale up can be done, since we have experience of geography across, wherever microfinance performed better. We had seen multiple crises. It may be Andhra crisis, demonetization crisis, or pandemic. In whichever location microfinance and individual lending performed better, I think that those are the markets to start this business, and we are doing that. Today, we are a meaningful player. From there, we would like to gain leadership position over next 3 years. We wanted to be top 5 players in affordable sector in terms of monthly disbursement. We would like to have strong asset quality. We are at 2.5% now, and we would like to have less than 1% by ensuring very much quality of customer acquisition, having tight monitoring on the collection side. Profitability is going to our focus. We wanted to increase our ROA year on year by ensuring excellent operational efficiency. Customer first approach, which we are already doing, but still long way to go in terms of turnaround time with the digital coming in, for onboarding as well as post disbursement services. we would like to be lender of choice in the segment to and in the locations wherever we operate. Today, Ujjivan Housing is well set to expand our growth with the recent strategic changes, whatever we have done. We would like to add more value to Ujjivan's asset book. We can, I think with the changes and the technology coming in, we could able to grow 3x in coming years, by which we are thinking to touch 9,000 crore book, and by adding another 1,000 crore book from our flagship product Micro Lab, we will be touching 10,000 crore outstanding by end of financial year 26, which is going to be more than 20% of Ujjivan overall asset book. With this, I would like to stop here. If there are any questions, let's connect during Q&A. Now, I would like to request Mr. Ashish Goyal to take you through credit and collection. Ashish is our head of credit and collection, and he had taken us through, especially the Ujjivan remarkable journey and improving asset quality post-COVID. Ashish and team have been on toes to ensure strong collection and tight control on slippages. Ashish joined Ujjivan about 2.5 years back. Before that, he was in leadership position in ICICI Bank for many years, and he has varied experience across consumer goods, branch banking, agri loans, and in collection and credit. Over to you, sir. Thank you.
Thank you so much for spending all your time with us and helping us share our story. I will take you through the asset quality journey that we have had over the last 2 years. As you know, COVID-2 was a very difficult time, and a lot of our customers had a huge impact. And we had a very uphill task as soon as COVID-2 got over. How did we prepare ourselves? What did we do on credit? What did we do on collections is something that I would want to share with you. On credit, of course, we did a lot of tightening immediately post-COVID because we were not very sure about the impact of the pandemic. We said we will service only repeat customers. We said we will have green, amber, red categories of industry, and we will restrict ourselves to amber and red industries. We'll go only with the industries that had minimal impact in our assessment. We also said that on the microfinance side, we will do only repeat loans. We will restrict new customers because we really didn't know what the impact of pandemic would be and how it would unfold over the next 2 or 3 quarters. So that's how the journey started. On collections, on the collection side, we again had a very uphill task. Sometime around June 21, we had a 30% PAR and almost 11.8% of NPA, and we had to recover from there. So on the collection side, we said that we wanted to add people, and the budget was quite large, but we said we will recruit nevertheless. We recruited almost 2,000 people in a matter of 45 days to 60 days, trained them and put them on the field. They worked with us, with all our existing employees in the branches. It helped in 2 ways. One, collection started happening. We started contacting customers, and a very large number of them. This was a separate collections team. And 2, it also released the bandwidth of our regular relationship officers so that they could service the existing non-delinquent base. So the delinquent base was given to the collections team, and this was largely an off-roll team. We built it with one of our manpower partners, and we said that we will be able to scale up and scale down as and when we require. So the recruitment happened quite fast. We put 2,000 people on ground, and in Q3 the journey started. So you can see the PAR started coming down, the NPA started coming down, and I'm very happy to share that in the last year, our SMA portfolio, which used to be about 20%, it came down to less than 10%. In the next 2 quarters post-COVID is now down to 1.2%. So we have very little SMA portfolio now that gives us the confidence that our slippages in the future, in the coming 4 quarters, are not going to be significant. On the GNPA, we had touched 11.8%, and the GNPA is now down to 2.6 for the bank. Our upgrades have been very good last year. We had about 506 crore of upgrades as compared to slippages of 335 crores. I'm also happy to share that the team that we put on collections in the last 2 years, you see a number 688 crores of cash collection from the NPA portfolio last year. But if we put post-COVID, this number is 1200 crore of cash collected. So immediately post-COVID, when we had put the team, they had collected about 550 crore of cash in the first year. This became 688 crore last year. So all put together, it's almost 1200 crores. Our restructured portfolio is another highlight, and I'll talk about it a little later. And overall, with increased collections, a restricted credit policy for the first 2-3 quarters post-COVID, we were able to bring a lot of stability to the portfolio, which used to be a big cause of concern sometime in Q2 of FY22, became a cause of much lesser concern in the subsequent quarters. This is our slippages and upgrades movement over the last 4 quarters. Actually, FY22 versus FY23. We had almost 2,088 crore of slippages last year, and this came down to 335 crore this year. And our upgrades, which were 1,086 crore last year, were much, although it was 506 crore this year, but it was much higher than the slippages that we had. As a result, our GNPA has consistently come down. Another highlight of this is Q1, Q2, Q3, Q4, you will see that the slippages have been consistently coming down. So the graph is a downward trend. So on slippages, again, as you saw, the SMA is coming down. My number of slippages and the addition to NPA has consistently come down. We also hold a 1% floating provision on our entire book. We provided almost 250 crore in June 21. And as of March 23, we have utilized about 150 crore of that, 120 crore towards calculation of GNPA, which is PCR basically, and about 30 crore in Tier 2 capital. And 100 crore of this is grouped as other provisions which we have not utilized. This number, as you see, has been coming down. So what is 100 crore of unutilized was 4 quarters back about only 30 crore of unutilized. So our provision addition, since it has been negligible, we've been using much lesser provisions, and our share of unused provisions has been going up. As of now, it is about 100 crores. And we maintain a PCR of 99%, 98.5, and an NPA of about 0.04, which is, I would say, consistent over the last 4 quarters. We've never crossed above 0.1% NPA in the last 4 quarters. On microbanking, this would be something that you would want to know. What did we do in microbanking in the last 6 quarters? And whether the book that we have built today would stand the test of time. And I'm happy to share, while our PAR is at 2.7%, our GNP is at 2.2%, and the SMA is at 0.6%. This portfolio that we have built over the last 6 quarters constitutes 86% of our overall microbanking portfolio. It is spread over 254 districts and 25 states and union territories. So it is not a concentrated portfolio, it's spread all across. The NPA SMA pool is quite well managed. And if I were to compare ourselves with the industry, our PAR is 40% lower than the industry at March 31st, 23. Our NPA is 30% lower than the industry. And our SMA PAR is, as I shared, at 0.6%. My 15 MOB, the bank's 15 MOB book is at 0.6%, 30 plus, compared to industry MOB at 1.8%. So we are 1/3 on 30 plus 15 MOB portfolio. So that gives us the confidence that whatever we are building in the last 15 months is a very strong credit quality portfolio. Our restructuring, so we did about 1700 crore of restructuring in the last two RF1 plus RF2. So the two restructurings which we did, one was in December 2020 and one was in July, August, September 21. These two were put together about 1700 crores. I'm very happy to share that our team has been able to collect 1370 crore out of that. 315 crore has been written off out of the 1700 crore and 145 crore is available on the books today, on which we carry about 81% provision. So restructured portfolio overall is less than 1% on our book, and it is down from 10% to 1%, and carries about, the balance is only 145 crore. The future damage is negligible because we are carrying 81% provision on that. Our collections for the last, I would say, 17 months has never gone down below 99.5%. So in December 21, the journey started with a 99.5 and above, and we've never gone below 99.5 in the non-delinquent pool. And in the last 6 quarters, we have consistently clocked 99.5, 99.6, 99.7. So this also means that our SMA pool is not increasing, it's consistently going down. Our NPA slippages have got completely controlled, and therefore the portfolio quality is holding up for the last 16-17 months. And if I include the overdues and the part prepayments, prepayments, etc., then the collection efficiency has never gone down below 110% in the last 14-15 months. One more important thing that I was wanting to highlight is we collected almost 592 crore of cash from the SMA2 and NPA portfolio in the last 1 year. You could see the numbers on the table, the orange bar, it shows 592 crores collected, and out of NPA alone, we collected almost 558 crores. So the team that we built is giving us some very, very good results. One more point to highlight, the cost of collections is only 20%. If you go to the industry and look at the cost of collection of PL or vehicle loans, you'll find that the agencies charge anything around 30% for every rupee collected. And we've been maintaining ourselves at 20%. So there again, we've got a big efficiency behind us in the last 6 quarters. Our rate of recovery, another highlight, has been about 105 crores in the last 1 year. And this is only on micro banking. All put together, it was 127 crores for the bank as a whole. On credit, there have been some significant improvements that have happened over the last 6 quarters. We moved ourselves to being compliant with the microfinance regulations of the RBI. We always were, but we wanted to put it on the system because the household bureau, the FOI was a new concept that came in, but we always used to have something called EMI to DI, EMI to disposable income, which in fact is a surrogate of FOIR. So we did complete implementation within the timelines that were given to us and with minimal disruption on business. So it did take about 4 or 5 months for us to put everything on the system, but once it was once the blueprint was ready, there was no disruption in business. Very, very minimal disruption, less than a week. We have, as a result, also increased our market share in the last 1 year from about 3.6% to 4.4% in the last 6 quarters. We do almost 3 lakh loans every month, and this now is happening at a TAT of less than 1 day. The approval TAT, the sanction approval or rejection TAT. The disbursement could happen on 2nd or 3rd day depending on the availability of the customer. But on the approval side, we are we do almost 3 lakh loans in less than a day, and all of them. We have a LOS which is fully integrated end to end. As Vibhas was mentioning, we have end-to-end paperless journey. There is no paper involved. All the authentications are through APIs. All the approval process is on the system, right up to disbursement. We've also, last year, as I was saying, we had restricted ourselves to repeat customers. Last year, we also opened new customer acquisition. And in the last 1 year, we've added about 9.4 lakh customers. This will become the repeat base for us in the next few quarters as we go ahead. Our individual loans, this is something again that Vibhas was highlighting. Individual loan base has grown very significantly this year because our graduation program from GL to IL has happened quite successfully. We've increased our borrower base by about 27% and the portfolio has grown by about 66%. We also wanted to highlight that our FIG portfolio in the last that we've built is now more than 1,200 crores. 92% of the loans are to entities rated A- and above. And in the last 3 years, we have diversified ourselves to 9 sectors, which we used to be restricted ourselves, which we used to be doing with 1 or 2 sectors in the past. In 3 financial years, 2021, 21, 22, and 2023, we've now been diversified into 9 sectors, and all of them seem to be giving us significant, we are broken into all these sectors now. And we've done a disbursement of close to 918 crores in the last year. On housing, 2 or 3 highlights. One, I wanted to compare ourselves in the 15 MOB book versus the industry. So our 15 MOB book is now at about 0.53% 30 plus. Sorry, the 18 MOB book. Our 18 MOB book is at 0.53% 30 plus. And the industry, the SFBs are giving a 1.03%. If I look at all players in the market put together, they give about 0.56 to 0.7%. 30 plus, all in the affordable space, between 5 lakh to 20 lakh. So this portfolio, again, we've been building well. We've put a lot of effort, energy, product teams, credit teams, policy, everybody has sat together, made a portfolio, taken all the corrective actions, and now we feel that the new book that we are building is significantly better than the industry. Our non-delinquent portfolio, which is the NDA pool in the last 18 months, is at 99.24% of the overall book that we have built. And now we are at 39,000 customers. We increased our customer base from 22,000 to 39,000. That was an increase of almost 70%, 71%. So with the increase in the customer base, the non-delinquent portfolio is now 99.24, so 0.75 on the 1 plus portfolio. On digitization, as Pradeep was mentioning, we are now sanctioning 75% of our salary base within 2 days. We've built, credit hubs, centralized credit hubs, so we're now able to respond within 2 days for 75% of the applications of the salary base. We, as I was mentioning, from 22,000 to 39,000, so this is where we are in terms of our increase in customers. And one more highlight, our LOS is now in the process of getting upgraded. So we should see that with the same set of people, we should be able to scale the business by about 2.5 times without increasing the number of resources, because our productivity will go up significantly the moment our new LOS is in place. So we should see that happening in Q2, sometime during Q2. On retail assets, the first half of the year and the second half of the year will show completely different pictures. First half of the year, bucket X resolution on affordable housing, which is the the orange line, and MSE, which is the green line. We had a good amount of restructured portfolio, which was not doing so well on both MSME as well as housing. In the first 3 or 4 months, April, May, June, the moratorium got over in November, December, Jan, Feb, March, April, May. These were the 4 or 5 months when the slippages from the restructured pool happened. After that, it has been a steady 95% and above. So the last 8-9 months, you will see, has been 95 and above on both affordable housing as well as on MSME. It's 94 and above. So as a result, our PAR has been coming down. So you see the PAR coming down from 9.4% in housing to about 5.7 now, and it will improve further because the bucket X is now stable at 97 and above, and the GNP again has come down. One more highlight here: 80% of our book on NPA is now covered with legal initiatives. Only the recent ones which have got added to NPA have not been covered by legal initiatives. So otherwise, everything else is fully covered. We are also, like I was saying, LOS is getting upgraded. We are also launching a new collection system, and this collection system is a completely, it will digitize our process end to end, from allocation up to receipts and up to, reconciliation. Everything happens on the system itself. It has beautiful dashboards. I would say the user interface is amongst the best in the industry. It will be available on the mobile phones of all our collection team and all the business team, which also handle the early portfolio. So it will help us in not only doing collections but also reviewing the portfolio the hour that we want to, because everything is online. Every disposition code is available, every trail is available, so we could review any account at any point in time. It also has geotagging, so that also helps us in handover of customers when people leave. So where did you collect it from? So I collected it from so and so geolocation. When the new person comes in, he could also be using the same geolocation to contact the customer. So this is one of the big things that we see. We might just have this live on the 1st of July. We're targeting ourselves a week before that, but 1st July we would be having a new collection system that will help us in a big way. With that, I would end my talk. Thank you so much. I would now hand over to Martin. Martin is our Chief Operating Officer. He's been with Ujjivan since 2009. He was in various capacities before he took over as the COO. And he started his career with Grindlays in 1996, after which he's been in retail operations and service quality and many other initiatives of the bank. And I would hand over to him. Over to you, Martin.
Good evening to all of you. Before I take you through the current and future of digital and technology, I will talk briefly about the history and DNA of Ujjivan. I've been part of the Ujjivan family for close to 15 years now, and I joined Ujjivan during the early stages. However, I should admit, Ujjivan had a unique business model for the microfinance. This involved marrying of the front end of Grameen microfinance at the front and modern banks retail back office. What it gave was, it could give us standardization in terms of processes, scalability, and customer service. This brought in a lot of efficiency, superior service, and ability to scale. The freedom given to employees for innovations and process improvements opened a gate of new possibilities, making us pioneers in several practices which are industry norm now. Some of these are, way back in 2011, we had introduced our core banking system in all our branches. Two objectives. One was better customer service. Second was efficient handling of cash, because in those days it was a very cash intensive business. By having this system in all the branches, it helped us to manage our cash very efficiently. It didn't stop there. We were the pioneers in introducing this cashless disbursement. Those days, payments were in cash, disbursements were in cash. We used to partner with banks to help our customers open accounts and transfer the disbursement amounts to their account. We also introduced scan-based processing. The intention was, because we are working out of 4 regional offices, to bring in speed of service and better customer experience. We had started with scan-based processing. This was sometime in the year 2013. There are many industry first to our credit. We have been using automated credit roll engine since 2014. And we have been pioneers in introducing tab-based processing. We switched over to tab-based processing in 2016. The objective was simple. How can it be made paperless? Second one, the biggest barrier for all our customers was filling up of documents and signature. We have used our other infrastructure and made biometric as the most powerful tool. In short, as we were transitioning into a bank, we enabled the same feature for account opening and literally offering most of the banking services at their doorstep. Chalta Firta Bank. So we have used the power of biometric in our ATMs. All our ATMs are biometric enabled. Latest addition are the cashless repayment. We have achieved around 30%, which was unimaginable a few years ago. The most recent one, what you see in the screen behind me, Hello Ujjivan. It's an example of taking technology to the masses in languages they speak, in ways and means they understand, with an objective to penetrate deeper into large aspiring segment of Indian economy, which Vibha spoke about. We have been largely dependent on distribution system, which is brick and mortar branches. We are strengthening our other pillars, phone banking, video banking, and digital banking. The objective is to provide services, sales, and transaction through these alternative distribution channels. This gives us an enormous power to sell, service, and transact across the country without any geographical boundaries. This goes very well with the requirement of the new generation customers who are not very keen on visiting branches. This will also bring in a lot of efficiency and superior customer service. So now coming to the technology differentiators, as a next phase of our journey, we have done fairly on the financial inclusion. We would like to now start commencing our work on the digital inclusion part of it. We have taken up numerous initiatives which makes technology simple and easy for our customers. To achieve this simplicity with speed, there is highly complex AI and ML based technologies working at the back end to deliver our unique experience to our customer. At Ujjivan, one aspect which has never changed from the time I have seen, it is our quest for offering the best in class services to our customers. So what is our customers' needs? Easy and friendly. So we have supported our technology with vernacular so that they can use banking services with ease. And whenever our customers face any kind of difficulties, we have a strong phone banking unit, which again provides services in the language our customers understand. We provide services in 9 languages. Since we are moving towards digital, safety becomes very important. I'm happy to let you know that our bank is rated among the best banks in the country in terms of digital security. The systems have to be reliable. We have always been leaders on the tech front, and our technology has enabled our businesses grow, which was mentioned during their talks by Carol, Vibhas, and Pradeep. To enable the future growth of business, we have taken up numerous initiatives for our secure businesses. We have done the infrastructure upgrade at our data center, DR sites. Cloud strategy we have taken up. One of our application is already live on the cloud. We are also adopting new technology, system reliability engineering. This will bring a lot of stability and availability of critical applications. And we'll also be looking at microservices based applications for scalability and resilience. We have partnered with best-in-class partners like Kraft Silicon, Infosys, Kyndryl, the list goes on. We have also made meaningful partnership with fintechs and technology companies in the various journeys of the customer, be it on customer engagement, be it on payments, be it on customer interactions or on their loan repayments. We have also hosted 73 of our APIs for consumption by fintechs. When I talk about fintechs, there is an important point to be noted because customer personal information is of paramount importance. So we will be adopting iFrame as a technology for transferring customer PIA data from their systems to our systems so that customer data completely is on our systems. We have imagined the entire customer journey digital, right from prospecting to onboarding, servicing, and subsequently multi-product offering. For prospecting, we'll be using advanced data modeling. We'll be using artificial intelligence, and we'll also be providing frictionless onboarding for our customers. Now talking about the most interesting part on the video banking. So video banking has two parts. One being a bank, KYC becomes of paramount importance. The mobile phone, what you see on the left side, it depicts a real-time conversation between a customer and a video banker. What it helps is the KYC, instead of customer visiting the branch or filling up the forms, it can be conducted over a video call and it can be completed in a few minutes. And these services can be delivered at customers' convenience 365 days a year, 8 a.m. to 8 p.m. Then coming to video banking. So video banking will offer banking services to our customers. So customers will not have to do any kind of IVR, and the customer can be delivered banking services on the video call itself. It will be very personalized experience, closer to interacting in a branch. So for the customer, the benefit would be, it will be very personalized, face-to-face interaction, no cluttered IVR menus. So what does it offer for the business? It complements our existing infrastructure. I heard one of the colleagues during the team deck saying that digital is not what everything it is. Yes, so digital can complement the existing infrastructure. So what it would do is it will complement the existing infrastructure, allow us to acquire and service customers who are far away from our base locations or locations where we don't have branches. We'll also be providing services to our customers because we are providing digital services to our customers who are first-time users. So we have created a dedicated team in our phone banking unit who can assist our customers, again in vernacular, so that they are able to complete the transaction in case they face any kind of difficulty. And if you ask me the kind of services which can be delivered through phone banking, the list is unlimited, some of which I thought I'll just take you through. For example, for a housing loan, the loan amounts are released in tranches. So for releasing the loan amount in tranches, somebody from our office is expected to visit the customer's place, ascertain the construction progress and everything like that. What this does is the customer will be able to take videos of the location, share it, and it will be completely digitally processed and the disbursement can happen faster. And it makes our services much efficient. So coming to our phone banking customer has been our center of anything what we do. We offer services in 8 Indian languages plus English. 89% of our customers use services in Indian languages. We offer 259 services through our phone banking unit. It's above the highest IPL score of the recently concluded IPL series. From a business point of view, it makes it very efficient because there is customer can complete their transactions on a phone call and also can streamline certain processes where the customer's initial screening can be conducted by the phone banking team and only the eligible customers can be passed on for the business so that your success rates are much higher. From a customer point of view, we are imagining a few things where reducing the wait time on the call center by having shortcut services. And we are also trained our phone bankers to help our first-time digital adopters. So we have developed a dedicated unit within the phone banking to support this set of customers. The star of the day, Hello Ujjivan. So this is a unique app which was developed. It has taken us quite a bit of time to develop this app. So what you see on the left, it looks like a tablet screen. It is that interface, what we have shown, where the customer, based on a voice command, can see her repayment schedule. We have created audio guides at every screen. And it's easy to learn with pictures. It is again supported in 8 regional languages. This application has got 2 awards. It's been a very unique application, one of the first in the country. It has been accepted by our customers, 2 lakh downloads so far, and close to about 11 crores in repayment we have received. Ujjivan Pay. So one leg of the transaction was crediting their loan amounts to their accounts. So we have created those enablers where our customers can accept payments in cash. So during his speech, Vibhas did speak about the pandemic. So the pandemic, after each kind of challenges, we have come back stronger with innovative solution. So this is something which we have come back and launched to our customers, the QR code, where we have close to 3 lakh customers using this QR code now, and it's growing at a very fast pace. In the last year, we could collect about 305 crores through this QR code. Our digital banking, digital literacy initiatives speaks for it. So out of the 19 lakhs mobile application users in the SFB space, 10 lakh users belong to Ujjivan. That is a whopping 53% share. We have created a lot of enablers in this space. On the right side, if you see, on the card transactions, we are the first among the SFBs. And we rank 24th across all the banks. Similarly, on the card transactions, we stand first among all the SFBs. In terms of cards issued, we stand first. ATM uptime, we are one of the best in the country. We are leaders in UPI usage. Happy to let you know that we stand second among SFBs in terms of volume. We stand 12th in terms of lowest technical declines. And we rank 31st across all the banks in terms of volume. The way the volumes are growing is, it has been 67 million in Q1, and it has grown up to 99 million in Q4, and it is continuing. So we have also adopted robotic process automation. What does this robotic process automation do? This can process a large volume of repetitive transaction. This has been implemented in 7 units of the bank, and we process close to 45 million transactions per month. Imagine if manpower was required to process this amount of volume, you will require a large army of people. So at every stage of our technology investment, we have looked at how technology can increase productivity, efficiency, and reduce our cost. These are some of the things which we have planned during this year. We'll be adding a lot more features to our video banking in Q2, and we'll be introducing WhatsApp banking, which can be a very effective marketing tool, and customer can make requests through the WhatsApp for all their routine requirements, and it becomes a very good cross-sell channel. We are also working on conversational AI chatbot. This is expected to be up by Q3. We have around 80 plus initiatives for this fiscal. The first box on the top is our traditional mobile banking app. The second one is the Hello Ujjivan. So we treat each one as a separate because the requirements, the features, the functionalities are unique for each segment. So we are working on each one of them. Then we are also looking at adding a lot more UPI enabled services, especially on the loan servicing. Now coming to the last block, which is that business net banking. We have enabled the GST payments on our business net banking. We are also working on integration with PFMS, Public Fund Management System, and also working on renewal of loans for our customers. We have many more planned beyond this year. One is instant in principle of our loans, fintech tie-ups. We want to do a complete digital journey of current account opening, WhatsApp banking based account opening, and many more, UPI Lite. To conclude, I would mention we will stay focused on providing the best-in-class services to our customers, that is fast, friendly, advanced, safe technology, continually reinventing ourselves to serve our customers better. I would like to stop here and invite Carol to conclude today's session and share her thoughts on our efforts translating into growth and profitability.
To summarize the detailed presentations made by each of us and our goals on the way ahead, it's been a journey of 12 years as a microfinance institution and another 6 years as a bank. These 18 years have been enriching for us to understand our customers better and serve them better. Especially the 6 years as a bank when we expanded our asset portfolio, started accepting deposits, introduced fee-based products, created a strong banking platform, and working hard to set up strong internal controls, risk management frameworks, audit controls, technology upgrades, adherences to compliances, and so on. While we are aiming for higher milestones, we are continuously adjusting our lens and focus to have clearer vision of the path ahead. We are investing in our customer connect through our skilled frontline staff who showcase empathy and professionalism, both. Alternate channels are being constantly enhanced to meet the customer needs and requirements. We are investing in technology to upgrade our underwriting and enable a much more data-driven and faster and accurate approach. Strong team of data analysts will further aid to our systems and processes. Some of the newer lines of businesses like the MSME needs detailed early warning signal mechanisms, strong portfolio monitoring and analysis. We are investing in these platforms to ensure much better portfolio health ahead. Also, COVID has taught us the importance of having a strong and dynamic collections, legal and technical teams. Our microfinance and retail collections teams have been strengthened over the past 18 months, as you have heard people talk about. They now have a very good experience of working with the off-roll manpower and agencies, plus using analytics to improve collection efficiencies. Pradeep has already detailed out investments in legal and technical teams, plus graduating to hub-based model, which will further improve efficiency, productivity, to manage rising business volumes with better cost and time management. As done in housing, we have just completed revamping our strategy for MSME. This business needs investments in people, credit, legal, technical, and more so on upgrading our technology platforms. We have made these investments and also worked on revising our products, making it specific to the customer segments and also training people. A 360-degree view of the business has been done, and basis the same, MSME 2.0 is shaping well. We have moved away from informal segments in the MSME space. I'm sure in a few quarters, Ashim Sarkar, he's sitting there, who heads the MSME vertical, would also be sharing a detailed story, just like Vibhas and Pradeep today share their success stories and plans for the future. In our largest business, microbanking, we continue to expand and disrupt the traditional way of banking for this segment and move from assisted to self-service model, as Vibhas has detailed out. I would only like to highlight that the industry has immense potential and is vital for India's march towards $5 trillion economy. We are the leader in the industry and will continue with new dimensions for growth. Our focus is to grow a balanced portfolio with a good mix of secured products, even for microbanking customers, and risk-based pricing to cover all risks to the business: credit risk, operating risk, market risk, and so on. As we grow, we are working on increasing our wallet share with the customer and move from a single product relationship to a multi-product relationship with the customer. We look to cover all financial needs of the customer, making them stickier on the platform. While I have discussed all these learnings and our focus areas in details for the liabilities, I want to highlight again our focus on building a granular and cost-efficient franchise on the liability side. As I mentioned, this would be through a strong push on CASA, digital, and alternate channels and customized solutions for target customer segments. Not losing sight on cost management, especially the operating costs. Our efforts like robotic process automation focus on productivity, intensive usage of technology, process streamlining would help us to reduce our OPEX and bring cost to income closer to industry average. As Mr. Davis highlighted in his opening remarks, our business model is volume intensive and would have higher than industry averages on OPEX. But our initiatives on digital side like the Hello Ujjivan and virtual relationship management in microbanking would help us narrow down this gap. Finally, we leave the audience to absorb our guidance for FY24, which we had shared a month back post Q4 results, and our trajectory for FY25 and 26. We target to take the secured book proportion to 40% by FY26, powered by a large housing book. Among other secured products, FIG, where we lend to NBFCs and headed by Parag Srivatsava, and MSME would have a large contribution, followed by vehicle, gold, and others. As Vibhas said, microbanking has immense potential as an industry, and we believe we will continue to grow faster than the industry. Our secured book would grow faster than microbanking, supported by investments in good loan originating systems, manpower, tech upgrades, and portfolio monitoring. Granular deposits make the backbone of any bank's funding strategy, and we strive to build a scalable and sustainable franchise which is capable of funding our aspirational growth targets. Since the audience today is that of investors and analysts, I would not end before mentioning that Ujjivan has a very profitable, secure, and high-growth business model with a mix of microbanking, affordable housing, MSME, retail, and wholesale liability businesses in our portfolio. These are being distributed and serviced by traditional feet on street and alternative channels, phone, video, and digital banking. The businesses can deliver a sustained ROE of 20% plus over medium term, as it is being built on an economic platform which is fast growing and evolving. Demographics of India, with an expanding, aspiring middle class, is opening gates to several opportunities, and our focus is on capitalizing on our strength, understanding this customer base and their needs. As stated earlier, we have reached the base camp and now ready to scale Mount Everest. We would stop here and open the floor to Q&A.
We can start with question answers.
We have seen the Ujjivan from the Ujjivan Financial Services IPO and then thereafter the SAP Bank IPO. So, and we have seen few mistakes by the Ujjivan during this journey, and we learned obviously from that. The first question to MD sir, how will be the different approach this time for the succession planning compared to the previous one?
Yeah, that's a good question. I think the succession planning the first time around was also good. The second time around now is also being done in the right way. The board is supervising it, and we have got professionals who are looking at the process. Now, unfortunately, in the first time around, COVID hit, and when COVID hit, it's very difficult to say whether it was the right steps or the wrong steps. But if COVID was not there, we would have been in different circumstances. So I don't think you could say that the first period was, or the first succession process was wrong. Because I think it was done the right way, and the second time around, which is right now, is also proceeding in the right way. So rest assured, whatever we have learned along the way, we will use. But Ujjivan is in a better place to be able to deliver a good succession.
Second question on the our mix is changing now from the current, it is 72% from the MFI segment and the 28% other segment, MSME, affordable and other segment. So, and we are planning to increase this non-MFI books further over the medium term. So how should we think two lines? One is your cost of operation, and secondly the credit cost in our business. Because MFI as a sector, we have seen very volatile credit cost across the time frame because of external factors, sometimes internal also. In the industry I'm talking about, not in Ujjivan in particular. So how do you see the credit cost and this cost of operation or cost to income ratio panning out for the business model we are now moving forward?
I think here I'll hand to our head of strategy, because that is a strategic question, so let him answer that. I'll chip in if there's anything else that I need to add.
I think on the credit cost, Ashish has given a very clear indication how we are building up the new book. On the overall bank side, we do not anticipate our overall credit cost to go beyond 150 basis point with the changes that we are anticipating in the business model. And on cost to income ratio, currently we have brought it down from where we were last year in FY22 to around 56% in FY23. This will stay at this level for a couple of years before we take the next step in terms of the complete change in the strategy. When, like Ms. Carol mentioned, it will start coming down towards industry average. And also the efforts that we are putting in on towards the digital side, like Hello Ujjivan, the virtual relationship management on the microbanking side, they will start showing their results as we move forward. One small anecdotal thing I'll put in, the cost of collection, it's a huge cost when you talk about microbanking. It's 10% in Hello compared to any other mean that we do. So those kind of cost benefits will start kicking in. We don't want to give a number to beyond what she has shared already on her way forward slide. So basis that we have taken in the ROE guidance that we have given in today.
And last question.
I'll add to that, just as I said, I'll add where necessary. Obviously, one of the questions which come to me at this stage is what will happen to NIM, because your model is changing. And that is, we are conscious about that, and as Deepak said, we are looking at the cost elements which will substitute and which will compensate for that. So we are confident that between managing the costs, we'll be able to make up for that. And also we are adding other products which have also a very good NIM, like gold loans and vehicle finance. So overall, the business model is still a good one, and we are conscious of the impact of the change which is happening, and we will work to ensuring that the profitability doesn't suffer.
Sure. And last question from my side, sir. Ujjivan has a philosophy of customer centricity in all their operations. So when I look at our customer base currently and the number of products penetrate to those customers. So basically I'm talking of cross-sell franchisee, how we are building, how we are measuring that vertical within the bank, and what are the target outcomes, because now we are moving to other products also. So I mean basically the revenue per customer metrics, how we should think going forward, and what are the critical internal indicators you are measuring so that we can have cross correction if it is required in our strategy.
So we are measuring number of products per customer. However, that is a number that we have not started to disclose, so I won't be able to mention that to your answer. But there's a lot of cross-sell, and you would have heard Vibhas, Pradeep, Carol all talking about that cross-sell. So there's a set of customers that you have which is aspiring middle class customer, and they are evolving, their needs are evolving. They need group loan, they need individual loan, they need micro lab, they need affordable housing loan, and their needs are growing. They need insurance product, they need savings, deposits, and multiple ways of savings and deposits. There is a customer base for MSME which also needs a lot of fee-based products. So all that kind of a cross-sell is happening, and Sriram sitting out there is quite busy setting up that analytics team that we are talking about will be done, or will be using this kind of, will be the base of that cross-sell.
And any equity dilution plan when you make the assumption of 26 target? So any equity dilution to fund that growth, or that will be self-sufficient?
We are running at a very high return on equity. It is a quite self-funding kind of a book. But yes, in that assumption, we have taken our equity fundraise in FY26.
Thank you.
One request, can we limit the number of questions to 2, please? Excuse me.
There has been a discussion on conversion to the Universal Finance Bank. I'm just trying to understand what would that mean in terms of operations for the bank. What extra would you be able to do that you are not able to do now, apart from addressing different set of customers? And financially, what could that mean?
Yeah, in Universal Bank, vis-a-vis small finance banks, there are certain things like the portfolio capital to begin with. You know, we operate with a minimum of 15% requirement by RBI. Universal Bank is much less, in fact it's below 10% based on the risk assets. In addition, the PSL portfolio, we need to have 75% of our portfolio PSL. The Universal Bank is 40%. So like that, there are certain, these are the main features, but there are other features also which come into play. So, getting a Universal Bank license will allow our capital to go a much longer way, and we will be able to build a more broader base portfolio. So all of those are things that will help us as we go along. So yes, an aspiration to a Universal Bank is something that all SLPs look for, and at some point, RBI has to look at that. Since 2014, when licenses were given to Bandhan and IDFC, no other Universal Bank has been, it's going to be 10 years soon, by next year. So I think the time has come now for people to look at going forward. But these are the main differences between SLP and a Universal Bank, and why it is attractive to move towards a Universal Bank.
Any time frame that you have in mind when you expect to get the approval?
Yeah, for Ujjivan, we are waiting first for the reverse merger to be completed, and then in the next financial year, we will look at that process. The board will consider because there are several things that we can look at. Universal Bank is just one of those, but with the reverse merger completed, a lot of opportunities do come up to take forward, and that will be considered in the next financial year.
Thank you.
Someone there, yeah, someone there.
Hi, this is Gautam Jain from GCJ Financial. Ujjivan now, I think, most earning efficient bank in India. Then you have 30% plus ROE, and 4% plus ROA. My question is why we take so long time to declare our quarterly results, because we declare after 30-40 days. So can we see from next one onwards we declare result within 30 days of the quarter end?
Yeah, I think our CFO is here, so that's his target for June. We hope to be able to get our results out before the end of July.
Because by the time it's 30 after quarter end, people go on holidays. We're so tired of seeing the top 30, 300, 400 crore result. After a month, obviously. So it's a suggestion. So
Anything to improve efficiency is on our target, and this is definitely one of those things that we have taken on consciously, and you will see that in the next quarter, the first quarter of this financial year, the results will be before the end of July.
Great. Second question is to Ashish. What are we doing differently than our collection efficiency continuously above 99% plus for last 12 months? Because I have been seeing collection efficiency of other MFIs and all. So can you highlight a particular point where we are much better in than compared to other players or industry?
So our collection efficiency, as I was saying, so there is something called, the non-delinquent portfolio, which is, zero DPD portfolio. That is something that we have been maintaining at 99.6 to 99.7. If we include overdues and if we include part repayments, etc., it goes up to 110, 115%. So there are two parts to it. One is the branch models, which means each branch is looked at differently. There is a branch metrics, which is what we call the BCL, which decides what kind of risk we are willing to take at each branch credit limits. So NCA has different matrices, the repeat has different matrices. That's on the credit side. And on the relationship side, I think most of our customers are selected so with so much of due diligence, and we meet them every month. Each customer comes to a group meeting, we meet them every month, we know each customer, and these geographies are very familiar to us for the last 15 years. So therefore it has enabled the system to generate that kind of efficiency now month on month.
So it's more to do with our underwriting or collection efficiency?
No, it's to do with our relationship management. I think, are managing our relationship much better. We also have not been, diluting our norms. For example, until a customer has repaid 70% of the loan, we don't offer a top-up or a repeat loan, which means that every person who's dealing with Ujjivan, every customer who's dealing with Ujjivan knows that we function in a very disciplined manner at our branches. So therefore, not giving too many top-ups, not repeating loans early, not going beyond branch credits. There is nothing called deviation metrics in our disbursements or our sanctions. So I think that discipline is what has helped us.
Okay. One more question can I ask?
Yes, please.
Yeah. So next question to Karol. So how many idle branches we want to have by 2026 or maybe next 5 years, a number of branches, and with that, how long can we grow more than 20%? Looking at market potential slide which you saw us.
So last year we did have a few branches opening. This year also we have a few branches opening. We are also, we have 100 plus branches opening this year. We are also expanding our penetration into various states now. Andhra Pradesh is also one states that we'll be opening our branch in. We are also, looking at how the digital is evolving. So it is going to be in a way ahead. It's not just going to be brick and mortar branches, but it will also be how our digital evolves. And Martin also spoke, and I spoke about the digital liabilities. Now, for example, the fixed deposits, the savings account, we can reach out to our customers, not beyond the pin codes. So it does not have to be just a branch there and then the customers would come. No, with digital, we can go beyond pin codes and reach out to a wider segment of customers. That's how we're looking at it. So, with digital comes efficiencies and that translates to all the ratios.
How long can we grow more than 20%?
I think that's a question which I leave to Deepak to answer.
We'll talk about 3 years. Give us some more time. We'll come back and talk about next 3 years.
Thank you so much.
But I can say that we are in a long-term upward trajectory.
Yeah. Can I ask a question? Yeah. So, in your guidance, you indicated a growth of 25%. I'm assuming that bottom line will grow at least at 25%. At the same time, you said ROEs could be 22% this year and maybe 20% thereafter. That number doesn't seem to reconcile because last year the book values that you have right now and the earnings per share that you have seems to suggest that it could be much higher than that, whereas you're still saying 22%. So I'm just trying to get a handle on that.
So all while I'll be happy to say that you are right, but on the bottom line growth of 25%, I would say that Ashish also mentioned about the credit cost. This year, our total credit provisioning was around 20 odd crore only, 18 crore to be precise. Next year, that wouldn't be the case. So while at PPOP level, the numbers may add up more or less where you're talking about, the bottom line would not be as high as you see, that kind of a growth.
No, I understand. I'm taking that also with a pinch of salt. Still, if we do the numbers, let's say we just look at what were last year's numbers, and we still divide that by your net worth, including the merged net worth, you'll still be at a higher number. So
the math is more or less on the right track. You will get a little higher number. So we have given a guidance of 22% plus ROE for next year.
So
Upper side
conservative.
Yeah.
Upper side is open.
Yeah, that I know.
We'll also keep doing our maths and keep upgrading ourselves.
Okay, and this merger, is it going to result in any increase in number of shares issued?
It will result in reduction in number of shares roughly by 3 odd crores, a little plus or minus.
And that's how the increase in the book value.
Yeah, so there will be roughly 2 rupees or a little plus or minus 10 paisa. They are kind of increase in the number.
Alright. So that again means an increase in the earnings per share also.
That will be increase in earning per share. That will be increase in capital adequacy ratio as well.
Right. Thank you.
Non-interest income to total income as a percentage is still lower than other banks or peer banks. So any strategy to increase that income other than loan processing fee, or are we have dedicated team or focused person to increase the non-interest income?
Yeah, I think that is our strategy. The non-interest income other than processing fees has been increasing steadily. Going forward, we'll be adding products to get more of those fees, and eventually once we get the 81 license and other things like that, there will be FX income coming in. So step by step we are building on that, and that is our objective. So you will see more of that as we go along.
Thank you so much.
Hi, Ashlesh here from Kotak Securities. Just one question to Vibhas sir on the asset quality front. Given the robust growth that we have seen in the MFI book, both individual as well as GL, what gives us comfort that, so currently the system seems to be doing pretty well, the banking system as a whole, and delinquencies are fairly low. But when the cycle turns, what is giving us comfort that we will continue to be well protected?
So I think Ashish also mentioned just now that the way we are processing loan and the way group loan is assessed and underwritten is a little different from how industry does that, and that to an extent gives us confidence that whenever there is you are talking about next crisis kind of activity, we will be ahead of the curve. Second, because we have a good portfolio mix at this point in time, we are 20% portfolio in IL. And we have also seen during pandemic that IL performance was much better than GL, as you are graduating good customer from GL to IL. And third is as we have built a strong collection team specifically for micro banking, that also gives you confidence that in such cases your collection team will help you not only in collection and also unlocking time for your field staff to continue with their business.
Thank you. Just one follow-up on that one. On growing the IL book, are we looking at growing the proportion of open market within that as well over time?
Yes. Today also about 10% of our IL business comes from open market. But this open market is something which is largely referred by our existing customer in the same locality. So though it is open market, but it is not open market because customer segment is same and they are known to our existing borrowers, both GL and IL. But yes, you will see some increase in open market acquisition as well.
Thank you.
Hi, this is Pratik Shira from Guardian Capital Partners. My question is on the microfinance side. In the coming 2-3 years, we are obviously predicting strong growth, but what I want to understand is what is the level of ticket sizes are we comfortable with? A couple of years back, when there was a West-based bank which was growing much aggressively than the others, everybody started getting very panicky about it. But now the industry seems to be following the same track. When we look maybe a couple of years down the line, what are the levels the industry as a whole is likely to be comfortable at?
Good question. One thing is that comparison of what you're comparing is about 7-8 years back or 9-10 years back and now. And first of all, whatever ticket size we are offering at this point in time to our customers, we are very comfortable with. Based on the underwriting, I mentioned that we have been able to underwrite our customers for the last 10 years based on not only the customer income but the entire family income, and that helps you in understanding customers better. And second is 10 years back and now the difference is that you have a lot of data on customer to understand that how they have been behaving with other financial institutions. And your ticket size is something which is based not only based on the customer individual history with others, but also their income at family level, and also at the same time you have branch-wise credit policies which help you understand the geographical and local risk clearly. I think the current ticket size is something which is an average requirement in the both urban as well as semi-urban areas. This was about GL group loan where the average industry ticket size is between close to 40 to 45,000. As far as IL is concerned, individual lending is something which is a graduation program where good customers after 2-3 cycles they get graduated to higher ticket size as their aspirations are different, and that is something where is again unsecured lending where the average industry ticket size is above 1 lakh. Beyond that, as we see that opportunity to cross sell or upsell semi-secured or secured loan to such customers, and that's why we have AMLAB and other products in the product basket.
So just a follow-up on that, are we currently also tracking the average loan outstanding per household when we include the multiple members of the same family? And if we are, what would be the current levels for it?
Yeah, so this is also mandated by the regulator that you have to also see the obligation at family level, and that is what we have implemented from last year, 1st of October. And that is calculated and taken in account while you are calculating FOIR for the customer at family level.
What would be the current level?
No, so that data I don't have currently, but this is something which is taken into account based on data available in the credit bureau and also in the person. Yeah, and FOIR is something which you have to keep below 50% as per the regulator's guideline, and that is something we follow.
On behalf of the entire community, I would like to thank you for having taken us through a very detailed presentation of Ujjivan. This incidentally is the first time after you went public that we are having such a event from Ujjivan in Bombay. I know you can't organize something like this every year. It's too demanding, but maybe a smaller version of this once a year would be a welcome suggestion. However, on behalf of all of us analysts who track Ujjivan or who have come to track Ujjivan, thank you very much, and give the entire Ujjivan team and Deepak a round of applause. Thank you.
Thank you.
Thank you for that. I think it is our intention to take this forward in the way you have suggested. Smaller groups, perhaps even something of this size which we can do every year. But yeah, the contact with the analysts analyst and investment community is very important. And you need to know our story as well, because sometimes, the quarterly numbers don't tell the whole story. So you have to go behind the numbers, and this is what it's all about. So thank you for attending this, and thank you for your questions and your interest. Please, I think I'll leave it to Deepak to take it forward from here.
Thank you, sir. Thank you all the speakers. Thank you all the guests here. Please join us for a cocktail and dinner outside, and we are available if you have any more questions in mind. We'll see you in July, as Mr. Davis and Ramesh confirmed, with our Q&A. Yes. Thank you.